Well, welcome to the European Market Open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacquay here in London. And here are your top stories. Piling on pressure, the U.S. Treasury cuts Russia off for making dollar debt payments through American banks. Washington and Brussels weigh more sanctions. Trade Impact will bring an exclusive conversation with the U.S. Trade Representative, Catherine Tai, this hour. We'll get into the global supply chain fallout and the U.S.-China deal. And nickel fallout. JP Morgan reviews its commodities exposure after last month's LME chaos. So it's not a dull day. We have to figure out exactly what the futures are looking at. Again, it's the story of inflation. I know a lot of the concern out there in the markets, but again, it's very difficult to model. If there's a gas and oil embargo for the moment, it doesn't seem that European leaders are on the same page. But also if Treasury is actually forcing Russia to choose between three options that they don't want to do in terms of the dollar bond repayment, what does it mean as a next step? And if there is an oil embargo, what does it mean for inflation? What does it mean for energy prices? So you can see a bit of pressure on some of these equity indices. The futures were down. Let's see how they open. This is, once again, the commodity space where everything will play out. So iron ore pretty much unchanged. Again, it's how you model a potential shock, sudden shock. It happened in 3 weeks. I know I keep on being told, look, winter, the summer months. So much easier to weather. The big concern is then in winter of this year, but you still need to see whether if it's a surprise, it hasn't been telegraphed and it happens, what happens to commodities and of course the read across to some of the foreign exchange, certainly the currencies that are very commodity rich and then some of the sovereign bonds, the Italian 30-year, for example, at 258. All right, indices are opening. They're kind of struggling for direction, down some 0.1%. This is your cross asset. We have to look at oil. Oil, one of the biggest, of course, movers when it comes to what inflation looks like longer term. We have Aussie dollar 76.23, and then S&P futures pretty much flat. The big story in the U.S. will be what's happening with social media, Twitter, and of course, Elon Musk now being the biggest shareholder of Twitter. Jack Dorsey, a reminder, has stepped down from that role. Now let's get over to the Bloomberg MLife managing editor, Mark Cudmore, always with interesting charts. And Mark, you're looking at the outperformance in Latin America.
Yes, absolutely, Francine. Good morning to you. I walk in every morning and kind of look what's been the big move overnight while I've been asleep, what's been the big move in the US session. And almost every day this year, it's either been the Brazilian real up about 30% year to date, or it's been Latin American stocks. So I decided to put this on a chart. And obviously, we've known this quarter has been exceptionally volatile, a very difficult quarter, but not for Latin American stocks. Up 30% year to date. And it's been a very easy trade. There's been one little minimal dip here, but that's irrelevant given you're already up more than 10% at the time. Now, in contrast, here are the other two big emerging market sectors. The bottom one, the yellow line, is the Emea Index, Europe, Middle East, and Africa. That was doing okay at the start of the year. Then as tensions started escalating and went negative, and this is when we had the Russia invasion of Ukraine, and that is staying in the doldrums. And I expect that to stay in the doldrums until we get some signs of optimism, of peace in Ukraine. The final line here is an interesting one. It's the Asian Pacific Index, just still slightly down about 6% year to date. Now, I think that the COVID impact on China means they'll get more policy support. And ironically enough, a lot of the assets in Asia, particularly the Chinese Hong Kong stocks, don't trade off the local economy. They trade off the policy messaging. So even though we might get a slower growth story going into the second half, I think that extra policy support means that Asia Pacific stocks can start doing better. And we might start seeing the outperformance of LATAM stocks start to slow down a little bit.
Mark, thank you so much for the great insight. And of course, that's something that we should probably look at a lot more. Bloomberg M Live managing editor Mark Cudmore with a great look at Latin America. Now let's get into the key market drivers with our markets editor Christina Kino and Grace Peters, JP Morgan Private Bank of the Emea Investment Strategy. So thank you both for joining us. Christine, talk us through a little bit about Treasury basically moving Russia in terms of how they can use dollar reserves, but it gives Russia three options, right? Is they either spend the new reserves, they either spend the revenue, they either drain their reserves or they default.
Absolutely, Francine. Three very hard options there for Russia. Certainly not something that they would want to take. And I think this really does raise a lot of questions over Russia's ability to make these bond payments now and how smooth that process will be. I think that was the initial concern when sanctions were being put into place in March. And then we've seen Russia time and time again make coupon payments, make principal payments on its bonds that have been due over the past month. And so there was a little bit of a feeling of a sigh of relief among investors that, look, Russia's continuing to make these payments. They've sidestepped a default so far. Maybe the situation isn't that bad. But I think this development from Treasury overnight really does up the ante on that situation and once again puts a lot of investors probably on edge at this point.
And Grace, how should markets look at this? Because this is, it seems that the pressure is being ratcheted up. We don't exactly know, where we go next, but also this could have huge significance.
Think about this, obviously the mechanism you mentioned, Francine, through to the higher oil price, commodities at large. We put that in the context of the data that we've received over the last few trading days, the US jobs report, global PMIs last week. All of this is leading in our minds to the idea that growth is going to slow quite meaningfully as a result of central bank policy, particularly the Fed, moving more restrictive. So this year, 2022, we still think that growth will be above trend, but I think this will be the last year of this cycle that growth will be above trend before we have GDP of only 1.5% penciled in for next year. So that speaks to moving through the business cycle at pace, and it speaks to us being late cycle by the fourth quarter of this year. Now, late is an end of cycle. We don't need to sell all risk assets, sell all of the equity book, but it does mean that there are some quite material changes we need to make to the portfolio.
Such as?
What do we do as we head towards later cycle? The first thing is to up in quality. We can do that on a cross-asset basis, but particularly in equities. And luckily, we've had quite a meaningful rally in equities in the last week. So whilst I think headline progress from here on an equity basis could be more limited, there's lots to do below the surface. So increase quality, sell those early cycle cyclicals like financials, buy into healthcare, GARP, as we call it, growth at a reasonable price across technology, and other sectors as well, and really look for balance sheet strength.
And Christine, this is kind of also the main drivers that you're seeing. But again, if you're a stock picker, it's very different than if you're a bond trader right now.
Absolutely, Francine. I mean, I think whether you're a bond or a stock trader, at the moment, it's a little bit kind of assessing what we saw in March and trying to figure out which trends that we saw in the first quarter or in the past month would potentially have room for some reversal. In the bond space, of course, we're starting to get questions now being asked over, have yields gone far enough that there is, again, something to be had for investors if they pile into, say, a 30-year Treasury bond now? It's a lot cheaper levels. They get much higher yield for it. If you're a pension fund seeking for that yield, for instance, that could potentially be attractive and maybe take some attention away from the equity space that kind of benefited from that bond sell-off in March. But again, it is kind of a shift in those trends and a question of whether it's a more of a tactical move at this point, or would they be brave enough to kind of rethink the entire trend when it comes to the rest of the year?
Yeah, and what I'm trying to figure out, Grace, which I find really difficult, is how you model a complete oil embargo on either side, because Russia could actually say, okay, let's turn off the taps and move on from this.
No, absolutely. I mean, that in our minds, when we model, and it's the same as you mentioned, Francine, it's the shock factor. It's the shock factor, and then how that fades, how long the shock hangs around for, and how it fades through the end of the year. So when we look at that, we think that if you were to disregard all of the barrels that Russia produces, you could be looking at oil north of $180, which in that scenario would certainly be enough to cause a recession in Europe, and is something I think that everyone would be keen to avoid. So we are looking to other sources of supply coming on stream. So the release of the US strategic reserves is certainly a step in that direction. But remember, that's only the equivalent of 1 million barrels over 6 months. So we still, as we look later down the line, need to see some more supply, or indeed demand destruction from the higher oil price levels, to start getting back into those more comfortable prices.
Yes, it's winter basically of this year that could be a lot trickier. So we'll talk a lot more about that. And also Valerie put together a great chart looking at some of the Russia reserve drain. It really maps out some of the things that Russia won't want to do but could do coming up. But Christina Aquino, thank you, our markets editor, and staying with us, Grace Peters, JP Morgan Private Bank Head of Emea Investment Strategy. Coming up, we'll have the latest on the fallout from last month's short squeeze on nickel prices as well. Plus, we'll bring in exclusive conversation with the U.S. Trade Representative, Catherine Tai. Don't miss her conversation with our very own Haslinda Amin. That's later this hour, and this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. And the place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Welcome back to the Open, everyone. We are 11 minutes into European trading today, and again, a lot of these equities are actually trying to find their feet. The DAX down some 0.1%. Overall, the European stocks 600 is actually gaining a touch. Now, European stocks are pretty much steady. Energy shares are advancing, with crude also up. I guess a lot of these stocks are actually erasing some of the sell-off fueled by the war in Ukraine as investors now lured by lower valuations. I don't know how long that lasts. I don't know whether we get extra sanctions on Russia and whether it changes everything, but this is where we are this Tuesday in April. Now, Elon Musk has become Twitter's largest shareholder, and the world's richest person already has ideas for how to shake up the social media platform. Well, Kathy Wood weighed in on what this might mean for the company.
I will say this could be setting up for another leadership change at Twitter. You never know. And I'm not jumping to this conclusion automatically. I'm saying it's one of many possibilities. It'll either be Agarwal changing the policy of the company to, really open source the censorship or call people out on censorship, or it will be a management change. I don't know what's going to happen.
Well, still with us, Grace Peters, JP Morgan Private Bank Head of the Emea Investment Strategy. Grace, no matter what you think of Elon Musk, he's fun to follow on Twitter, and he was doing all these polls like, is it free speech enough? Should you have an edit button? Will he rechange the social media platform?
I think that when we think about the structural changes that are taking place across the technology sector, we still think that large cap tech is the place to be. I mean, I mentioned in the earlier segment moving through the business cycle, late cycle approaching towards the end of this year, and what we're looking for there is quality compounders. And I think large cap tech absolutely fits the bill. You do need to be selective. Obviously, business models are evolving, and this is a more mature segment, but we almost want to tap into that maturity because of the balance sheet strength, because of the potential to grow dividends and return capital to shareholders, and all of that is a great ballast as you approach a phase where headline growth sinks below trend levels. And if we think about the S&P, which has obviously got a very heavy weighting to these large cap tech players, when we look at profits for this year versus 2019, profits are around 25% higher, which means cash flows are higher, and all of that potential for shareholder returns is much greater. Valuations have also compressed, obviously. When we think about, the move that we've seen in long-dated yields, we still think the direction of travel of the 10-year, for example, is up. But you're starting to get, we think, to levels where the asymmetry of risk is that we're starting to reach the upper ends, which benefits tech as well.
Is there I guess the biggest fault for them is something happening with China, either, more of a crackdown or this listing that we've been talking about day in, day out? Or they're fairly protected to some of the other swings, inflation, everything else?
Yes, I think so. And again, with the issues that we've seen in China, that's seen that region, and particularly China internet names, underperform materially over the last 12 months, and particularly year to date. Our sense is that we're, coming through the woods, and we're closer to the end than to the beginning. We do like investing in the China region. We're with China seeing the potential for, more fiscal stimulus, policy stimulus coming through at a time when the rest of the world is tightening on the monetary policy front, and therefore you're starting to see the credit impulse bottom out, potentially upwards inflect, and we think all of those are good lead indicators for Chinese assets at large. Our preference for investing in the region is not so much China internet, because there are still risks out there that could affect both profits and valuations, but we do like onshore Chinese equities, and we think that's a really good way to play fiscal spending.
When you look at geopolitics, I mean, it seems that we're redrawing the map worldwide. If there's a rapprochement between Russia and China, does China at the end of the day benefit because of the access to resources, or is there a danger of sanctions also against China further down the line?
Yeah, I think both are possible, but when we think about those lines being redrawn and we think about the investment implications of that, we think that self-sufficiency in itself is a really key post-pandemic theme, and that applies around the world when we think about the disruption that we've seen to supply chains that are ongoing, of course, and likely to be impacted further by as a result of war. Self-sufficiency and infrastructure spending, which could be digital infrastructure, physical and green infrastructure spending as well. They would be two things that we would point to that are highly investable, but that are, as you say, very, very different in the post-pandemic cycle, and given all the geopolitical risks that are still elevated now versus where we were in previous cycles.
Is there anything in Europe that you like right now, given the proximity to Russia and its, the hard impact it really will hurt this region?
Yes, and I know I mention it every time I'm on the show, but European luxury we think is, an absolutely fantastic place to be. There's been much said
even without the Russian buyers.
Even without the Russian buyers, there's been so much said about the wealth effect post-pandemic, the accumulated wealth. Where that has accrued is in middle and upper households, so greater propensity to spend, strong structural themes coming through around premiumization and also casualization, which luxury can tap into nicely, and absolutely fits the bucket of compounding companies. There's many good dividend growers in there with strong balance sheets, or the ability to make M&A if there's a brand that they can turn around, which many have success at doing that as well. So European luxury would be top of the list.
So on the flip side, is there anything that you would absolutely either sell right now or a sector that looks mispriced?
Yes, so we've been selling financials. That's a sector that we were involved with, but it fits to us in that early cycle bucket. And as we move through the business cycle, as we take advantage of this rally that we've seen in markets, it's one of those sectors that we think it's right to sell and rotate that cash into more defensive parts.
This is despite rising interest rates?
Despite rising interest rates, because obviously as we think about the growth slowdown, banks are still very sensitive to the broader economy, and whilst balance sheets in the financial sector are much stronger than they were last cycle, we would put the greater emphasis on the growth slowdown rather than the curve at this point in time.
Grace, as always, thank you so much for joining us. Grace Peters there, JP Morgan Private Bank Head of Emea Investment Strategy. Now, coming up, the heat from last month's nickel short squeeze continues to be felt amongst investors. JP Morgan's now said to be reviewing its business with some of its commodity clients. We dive into that next. This is Bloomberg.
What's happening on Wall Street?
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Welcome back to the Open, everyone. We are 21 minutes into the European trading day, and you can see markets trying to find their feet. If you look at the European stock 600, they're gaining some 0.1%. The DAX pretty much flat, a bit of pressure on the FTSE 100. It's very clear that stocks are trying to find a bit of a steady floor. Futures in the U.S. also pretty much steady. Again, oil climbing, investors evaluating really the prospect of extra sanctions, tougher sanctions against Russia. Now let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. The U.S. Treasury Treasury has halted dollar debt payments from Russian government accounts at U.S. banks, increasing pressure on Moscow to find alternative funding sources to pay bond investors. Bloomberg has been told the move is designed to force Russia to either drain dollar reserves held in its own country, spend new revenue, or go into default. That's as a payment on the country's sovereign debt was due Monday. Airbus may further delay its production plan for its A350 wide-body jets due to sanctions on Russia and a legal fight with Qatar Airways. Sources tell us the plane maker is pushing its target of building 6 A350s a month from early 2023 to the end of that year. Airbus had already slowed the ramp-up by 6 months. The UK is to push ahead with the privatisation of state-owned broadcaster Channel 4 Television. Bloomberg understands the government sees a sale as letting the channel grow and generate intellectual property, but with it remaining a so-called public service broadcaster. The plan is likely to come alongside other broadcasting reforms by Culture Secretary Nadine Dorries. That's the Bloomberg Business Flash. Francine.
Laura, thanks so much. Laura Wright in London. Now, JP Morgan said to be reviewing its business with some of its commodity clients, a move that could drain more liquidity out of the sector. The bank is one of the largest players in the global commodities market, and this move comes after last month's nickel short squeeze. Meanwhile, the metals world cannot seem to decide whether to keep buying from Russia. Well, joining us now is Bloomberg Energy and Commodities reporter Jack Farchi. Jack, first of all, what does this move from JP Morgan actually mean for a very turbulent nickel market already?
Yeah, I mean, I think it's hard to overstate how important JP Morgan is in the metals market. There aren't that many big banks still trading commodities in a serious way, and certainly in metals there are very few. JP Morgan is the largest by far. I mean, we should be clear, we're reporting in this story this morning, they're reviewing their business, they're doing extra due diligence on a number of commodities clients, looking again at some financing transactions. JP Morgan itself says it's still committed to the commodities business, so we're not saying that they're pulling out of commodities or anything like that, but nonetheless, I think it's a sign that, you know, we've had this enormous volatility across commodity markets. Nickel is, you know, the canary in the coal mine, but actually, you know, you look at gas, oil, aluminium, zinc, wheat, you name it, commodities have been exceptionally volatile, and that means it's more expensive, it's more risky to trade commodities, and what you're seeing is a huge reduction in liquidity from commodity markets. You know, it's probably not, it may not be on the radar of all of the viewers of Bloomberg TV, but you have a bit of a financial crisis at the moment brewing in commodities. You know, liquidity is down a lot. Things like bid-ask spreads have widened a lot. Volumes are down.
So Jack,
interest is down.
Yeah.
The commodity markets are really flashing some warning signs at the moment.
So we could see a big margin call and someone could go under, or, you know, what's the worst case scenario?
Yeah, I mean, I think as you withdraw liquidity from the markets, if you have a big event that creates, you know, a big move in prices, which is, you know, the kind of thing that everyone is talking about at the moment with Russia, you know, new sanctions, some development in the war, God forbid, that kind of thing that could cause commodity prices to move dramatically in one direction or the other, then there are fewer market participants willing to put their money on the table and smooth out prices and engage, and so the price move can be even more extreme.
So Jack, what are the metals trader? I mean, on a point, what are metals trader doing about Russian supply at the moment? And again, that's linked to something, you know, possibly ugly happening.
Yeah, I mean, it's quite interesting, actually. So there's been a big debate among metals traders and on the LME about whether they should ban supplies of Russian metal to LME warehouses. So far, the LME has said, no, we're not going to do that. We're going to follow whatever governments tell us to do, essentially. But there's quite a divergence between companies saying, when it comes to new business, we don't want to buy any Russian metal anymore. It's very hard to finance Russian metal. Banks don't want to finance it anymore. But then actually, when they have pre-existing contracts, and most of Russia's metal exports are sold on long-term contracts that last years to people like Glencore and BASF, those existing contracts are still being fulfilled.
All right, Jack, thanks so much. That was Bloomberg Energy and Commodities reporter, also author of a wonderful book that everyone needs to read, Jack Farchi. Coming up, we'll have the latest on the Ukraine war next and dig into what new sanctions could mean for European energy. This is Bloomberg.
that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccines specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Piling on the pressure, the U.S. Treasury cuts Russia off from making dollar debt payments through American banks. Washington and Brussels weigh more sanctions. Trade Impact will bring an exclusive conversation with the U.S. Trade Representative Catherine Tai this hour. We'll get into the global supply chain fallout and the U.S.-China deal. And nickel fallout, while J.P. Morgan reviews its commodities exposure after last month's LME chaos. Now, let's also check on the markets. A bit of stability so far for the markets. Again, this could change at a moment's notice, but you can see the European stock 600, 0.2% markets once again, and traders trying to figure out the fallout from extra sanctions from Russia, what this means in terms of the availability of Russian debt. We were having a good conversation also with our Jack Farchi about some of the things that we should watch out for, which is a possible margin call or something ugly happening on the commodities markets. Now, contracts on the S&P and NASDAQ futures, little change. Treasury yields rising, with the spotlight, of course, remaining on inverted yield curves. Let's also take a look at some of the sectors on the move. Now, if you look at what we're seeing overall, it's very clear that some of the market moves are continuing to be shaped by the conflict and tightening monetary policy as raw material costs are stoking inflation. Auto parts, technology, and chemicals on the upside. You see basic resources and industry, travel and leisure, some of the biggest fallers. Now, Bloomberg has learned that the U.S. Treasury has halted dollar debt payments from Russian government accounts at U.S. financial institutions. It comes after alleged atrocities committed by Russian troops in the Ukrainian town of Bucha were discovered.
We have to gather all the detail so this can be have a war crime trial. This guy is brutal, and what's happening in Bucha is outrageous. I'm seeking more sanctions, yes. I'll have time to announce that to you.
Now, for more, we're joined by Bloomberg's executive editor for international government, Ross Matheson, and our European correspondent, Maria Tadeo, in Brussels. So thank you both for joining us. Maria, let's start with you. Condemnation growing over these atrocities. Both the U.S. and Europe are promising more sanctions. How effective can they be?
Well, Francine, what is clear is that more sanctions are coming. This is just a matter of time, whether this is today, tomorrow, by the end of the week. And that move, of course, by the U.S. Treasury to essentially force Russia to either burn through reserves or default on payment. Then when it comes to the European Union, Francine, tomorrow there will be an important meeting of European ambassadors here that will really signal now whether or not they're ready to touch energy. We know this is very divisive, and for the time being, the official line coming out of Germany is that they're not ready to switch off from gas. gas. But Francine, ultimately the debate here is if Russia can continue to pay for U.S. denominated debt, if they can continue to sell oil and gas and make money out of that, is this really the mother of all sanctions, particularly in light of the pictures we saw in Bucha? It would seem no, and the political pressure is definitely increasing.
Yeah, and Roz, I guess, there's many questions given what we heard from Treasury overnight. Are the sanctions working at all, or is this just a way of saying enough is enough from a political and also humanitarian standpoint?
Well, certainly the sanctions must be pressuring the Russian economy. We're seeing that squeeze that Maria was just talking about, including the news yesterday from the US Treasury Department, but it hasn't changed the course of the war on the ground. You still see Russian troops now redeploying heavily in the east, in the south, the attacks continuing overnight, putting the squeeze on certain big cities, including Mariupol. So the campaign hasn't really been altered by this. The question is what would? Would it be further military assistance sent in from NATO, short of fighter jets, sort of a no-fly zone, but can they send in further artillery to at least keep supporting the Ukrainian forces on the ground?
Yeah, a lot of questions, Ross, on the back of that, which is, and we heard from Fiona Hill, I think, yesterday, saying that now what, Vladimir Putin wants to do has completely changed. From taking over Ukraine, it could be just annihilation. Like, what kind of, research, or who are we relying to give us an idea of what Russia's thinking is now?
Well, it's very hard to know their thinking, but you can certainly see on the ground how it's being enacted, at least, and that is, again, perhaps the withdrawal from the north doesn't mean that they've given up on Ukraine. It means they're redeploying, because what they probably want to do is carve out all that eastern flank of Ukraine down to the south. If you move further west than where they are now, beyond Mariupol, you've achieved a full land bridge between Crimea. You're anchoring Crimea then to the Russian mainland, and that cuts out a lot of port activity, maritime activity. It makes it harder for Europe to get grain from Ukraine. So really, you can see a protracted situation where Russia essentially occupies that part of Ukraine for the foreseeable future.
Maria, I mean, the U.S., again, warning that Russia may have changed its plans to concentrate its forces on the eastern regions. So where does this leave peace talks?
Well, Francine, and again, just to go back on the point that Ross made, to get control of Mariupol, but also get control of the entire Donbass, ultimately is the corridor that Russia has said it wanted to create and establish. So a lot of the fight, of course, is now concentrated there, as Ross mentioned. When it comes to the peace talks, I think when you look at the reality on the ground, what it shows is that these talks are not really moving forward, that the ceasefire that Ukraine says they need before they get into the real talks is not going to happen. The fighting continues. But also, Francine, it goes back to what Ukrainian officials have told us repeatedly on Bloomberg TV, that they believe that Russia intends on occupying and really gaining control of the east, and at that point, with all that leverage, get into the real talks. But what it means in real practice, of course, is that this is a war that's going to continue potentially for weeks longer.
And Roz, why would Ukraine then, keep on talking with Russia in terms of peace talks? Like, is there a possibility that we actually get something?
Well, it's interesting because there were supposed to be video talks yesterday between negotiators from Ukraine and Russia. There's been no confirmation whatsoever from either side they actually happened. Will they potentially happen today? But they're back at that negotiator level, and that was simply, as Maria said, to try and get a ceasefire for at least 48 hours. Ukraine says, given what they've discovered in the north, not just in Bucha, but possibly other towns and villages, and what's happening in Mariupol, they need to concentrate on getting a pause in the overall fighting so they can get aid into these areas, they can get people out. At least that's a start. So it makes sense to keep talking on that. The broader peace agreement, well, that's possibly weeks or months away and ever more complicated by the events on the ground. But at least you need to have a conversation to agree the terms for a short-term truce in the fighting.
All right, thanks so much. Our executive editor for international government, Ross Matheson, and our Europe reporter, Maria Tadeo. Now let's also get into what this could all mean across the energy space. Joining us now is Chris Weaver, Chief Executive of Macro Advisory. Chris, the way things are going with some of the horrific pictures that's really coming out of Ukraine, the fact that sanctions are slowly being ratcheted up, at some point, will we have an oil and gas embargo?
Well, I think that's inevitable if we continue to see the sort of pictures that we've been seeing in the last couple of days. Then I think Europe and particularly Germany will have no choice but to take the very tough decision and start blocking the import of oil and gas. And of course, once, as Russia has said, once Europe starts to reduce volumes, in other words, moving away from existing contracts, then Russia may actually suspend all exports at that point. So we are definitely moving closer to the point that we did not think we would be even talking about a couple of weeks ago.
But Chris, how fast could this come? I mean, if this is inevitable, I don't know what's priced into the markets. And again, what happens? So there's an oil embargo. What happens to inflation? What happens to gas supplies? What happens to Europe?
Yeah, I mean, look, it's not priced in. I think people are still sort of either hopeful, I guess, that the situation will stabilize so that we don't get to the point where you have a complete energy embargo. But, it's becoming increasingly difficult to avoid that. If it were to happen, then I guess it's a balancing game because, look, right now, Russia's financial lifeline with the West is based on continuing energy and materials exports. So as we saw last week, Russia has designated Gazprom Bank as the receiving agent. The Gazprom Bank is allowed to use SWIFT. So basically, Russia is able to collect the money from exporting energy to Europe. And that's enough money to keep the economy afloat, to provide social subsidies, employment subsidies, and to pay external debt, albeit different ways. Now, if that conduit were to be closed, if the energy exports were cut off, then Russia would be starved of that money. Russia would have a financial and severe economic crisis within months. Europe would have a severe energy crisis probably by next winter, perhaps with a lag of 3 or 4 months. So it's a game of chicken at this stage.
Yeah, a game of chicken, but who has the most to lose? And Chris, if this is,
Russia,
we did hear a plan from
Russia
Germany. But can Russia not actually sell some of the gas and supply? And I know you can't just switch and sell it to China, but they will find buyers in Asia for it, won't they?
Well, not easy because, again, the infrastructure isn't there. It is actually worth making that point that since 2014, Russia has greatly diversified its trade. So Russia's biggest trade partner is China. It's selling a lot of energy to China, and that will not be disrupted by sanctions, and that money will come. But Russia cannot switch, say, the gas flows. The pipelines simply aren't there. It can switch only a small amount of oil, maybe a couple of 100,000 barrels. That's it. The infrastructure simply isn't there to switch to other markets. So Russia will lose heavily. If there is an energy embargo, Russia will have a financial crisis within months. And then Europe, of course, will have an energy problem next winter. So, yeah, that's the equation you're definitely looking at this stage.
Chris, what does it mean for the European economy? And again, we have a laid out plan, which seems one of the only viable ones from Germany, and saying, right, if we have an oil crunch and we need to decide what industry to power, this is what we'll go for, we'll prioritize this and this and this. It's basically rationing. Will the rest of Europe have to do the same?
Yeah, it will. Look, the oil is the lesser of the two kind of evils, as it were.
Right.
Oil
Gas is the bigger one.
Gas is the big one. You cannot replace the gas. And all of the talk about, the political commentaries from Brussels, etc. The reality is that Europe will simply not be able to replace that gas for years and without significant investment to do so. But really, you're looking at anywhere between, say, 2 and 4 years before you can start to source gas to replace the Russian volumes. Oil is different. You can replace the oil. The refineries can be adapted. More oil can be sourced. For example, if the Iranian deal were done, you get more oil. The OPEC could produce more. So oil is manageable. Yeah. You probably would have some shortages. You probably would have some upward pressure. And clearly, it would be a factor in inflation coming into the second half of this year. But it would not be sort of economically critical in the same way as cutting off gas would be for both Russia and for Central Europe.
Chris, what's the fault line next? So is there going to be a splinter in Europe? I know if you watch Italian TV, there are many, many commentators, which is really a surprise, especially if you live in London, that, say, well, we shouldn't sever ties with Russia. It's still a strategic partner and we should remain neutral in this. So it's not that, easy for a lot of the leaders to get their populations behind this.
Yeah, absolutely right. There is a fracture that's beginning to appear between, I guess, Western Europe, say in London, which is, relatively isolated from Russian trade, is not as dependent on Russian energy or materials as Central Europe. So I think it's just a case of kind of economic reality. The countries that are closer to Russia's border are more dependent not only on energy, but other materials, whether it's fertilizer or even electricity, etc. And those countries are the ones who are urging more caution because, when you sort of sit down and do the maths or do the calculations, you realize fairly quickly that you cannot replace say, energy imports from Russia or other material imports from Russia. And you've got to deal with that. So that's why those countries on Russia's border in Germany and the Baltics and East European states are urging caution, because they know they will not be able to replace lost Russian energy. It's not the same for France or the UK. That is not in that situation, but Eastern Europe is.
Chris, what does it mean for China? What's China's role in this? How friendly will they be towards Russia?
Well, I think you can divide that into two parts. First, right now, China is definitely kind of, if you like, suffering because of what's happening. So on the economic side, it's seeing higher input costs, so higher gas prices, higher oil prices, higher coal prices, etc., because of global price increases that you talked about earlier with Jack. And secondly, we see in Beijing, and we can hear from Beijing, that the Chinese leadership is under pressure also because, they're being linked, I guess, as a supporter of Russia. So politically, a lot of commentary in the West is saying that China is encouraging Russia, is supporting Russia, and therefore in some ways implicated. And that certainly is something that they don't like. But longer term, China is definitely a beneficiary. I mean, the last 8 years, China's gained a lot from sanctions in Russia. It now imports a significantly larger volume of oil and gas and coal and other materials directly from Russia across land, and that will increase. We know, for example, that China has set up a committee of big state companies looking at opportunities to invest in Russia as Western companies pull out, particularly of strategic industries. So long-term, China is looking to strengthen its economic position, but short-term, it's got a problem.
Chris, thanks so much. Chris Weaver, the Chief Executive of Macro Advisory. Now, coming up later this hour, we'll bring you some of our exclusive conversation with the U.S. Trade Representative, Catherine Tai. Don't miss her conversation with Bloomberg's Haslinda Amin. This is Bloomberg.
About what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Welcome back to the Open, everyone. 47 minutes into the European trading day, and this is what we're seeing across the board. A bit more stocks support. If you look at the European stock 600, they're gaining some 0.3%. Again, now what the market is trying to do is price in extra sanctions, what that means, of course, for the price of oil and inflation. Energy shares advancing, so is crude oil. Now let's get straight to the Bloomberg First Word News with Laura Wright. Hi, Laura.
Hi, Francine. New research shows the Earth may warm by more than 3 degrees Celsius, which is twice the international goal enshrined in the Paris Agreement. The report from the Intergovernmental Panel on Climate Change warns on still unchecked emissions of greenhouse gas pushing to record levels. IPCC scientists say emissions must peak before 2025 to keep climate targets alive. Shanghai has reported more than 13,000 daily COVID cases for the first time as a sweeping lockdown and mass testing of its 25 million residents continues. The outbreak in the financial hub pushed the national total to more than 16,000 infections for Monday. That's the highest one-day figure recorded in China during the pandemic. JP Morgan is said to be reviewing business with some commodity clients after last month's nickel short squeeze. In a move that could threaten to drain liquidity out of the sector, management has ordered fresh due diligence on some existing clients, including metals traders and oil refiners. The US bank is one of the largest players in global commodity markets and the biggest in metals by far. Now, Elon Musk has acquired a 9.2% stake in Twitter to become the platform's biggest shareholder. Twitter shares surged by as much as 31%, the biggest one-day rise since its trading debut back in 2013. Musk's filing with the SEC suggests he intends to remain a passive shareholder, though he shared a poll yesterday about the new feature for the service. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Francine.
Laura, thanks so much. Laura Wright in London. Now, U.S. Trade Representative Catherine Tai says the U.S. is assessing the global impact of the war in Ukraine. Tai has been speaking to our very own Hazlin Amin.
All eyes are on not just Russia and Ukraine, but all the rest of us in terms of how we're going to react. And there's a complex set of dynamics at play, certainly on the economic front.
Well, that was U.S. Trade Representative Catherine Tai speaking exclusively to our Hazlin Amin. We'll have plenty more, of course, of that conversation shortly. Coming up, we also have your Bloomberg Big Take. Russia's war in Ukraine is wreaking havoc on the $120 billion global grains trade. That interview and that story is up next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon. Can ESA help humanity take its next giant leap?
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the Open, everyone. 53 minutes into the European trading day. We were talking about shares, European stocks that little changed. If you look at bonds, it's probably the most interesting bit when it comes to certainly what we saw in the fixed income market over the last couple of weeks. We're still on inverted yield curve in the U.S. watch. And you can see some of the, for example, Spanish asset managers looking at reducing risk. If you look at the Italian 10-year, 2.133, France 106, and then Germany at 0.55. Now, time for your Bloomberg Big Take across Ukraine's farm belt. Silos are bursting with 15 million tons of corn from the autumn harvest, most of which would have been hitting world markets. But the stockpiles have become increasingly difficult to get to buyers, providing a glimpse into the real turmoil that Russia's war has wrought in the global grains trade, which is worth some $120 billion. Well, joining us now is Bloomberg's agriculture reporter, Megan Durson. Megan, so much to talk about, actually. So grain being exported from Ukraine, is it still happening? Is it, a sliver of what it used to be, or has just stopped?
That's right. A sliver is probably the best way to describe it. So usually Ukraine's corn would be loaded onto big ships at the Black Sea ports bound for Asia, Europe, other customers. Now those ports have been closed since Russia's attack began. So some of that grain now is being railed to the western border to its neighboring nations. And then it can be, flow on to ports in Romania or Poland. But that's more expensive. It takes more time. The volumes are much smaller. And one big complication, the track sizes are different in Ukraine and EU, big problems at the border.
And so what does it mean at the moment? What happens to the grain? I guess everything's being redrawn. Are there other parts of the world that we need to look at to try and understand what happens next?
That's right. So the situation in Ukraine is really having ripples all around the world. So we're seeing, for example, India has become an increasingly large wheat exporter. Usually that country doesn't export much wheat at all, but prices have gotten so high that it's now competitive. It's sending record amounts all across Asia. And on the import side, countries like Spain or like China that typically buy a lot of corn from Ukraine this time of year are now turning to the U.S. instead. So we're seeing the first U.S. corn cargoes to Spain in something like 4 years. China also bulking up its purchases.
So Megan, will it be enough to cover what we're losing from the Black Sea?
That's the big question. So the International Grains Council is expecting a 12 million ton decline in global grains trade this year versus last. That's the biggest drop in about a decade. The biggest questions are going to come towards the middle of the year when Ukraine and Russia as well will be collecting their next harvest. How big will those actually be, and how much will make it onto world markets at that time?
And of course, I mean, if you're a country that can afford to pay more, then you're okay. But if you're a poorer country, then you really suffer. Is there like a bidding war on who gets grain from the U.S. and India?
Yeah, I mean, global grain prices are quite high at the moment. Wheat is above $10 a bushel. Usually it's in single digits, certainly. And the UN has expected that food prices could rise as much as 22% from already elevated levels. So it's certainly high times in the grains world.
Megan, thank you so much. Megan Durson there taking us through the grain story, today's Bloomberg Big Take. Congratulations on a really important story. I'll also push that out on social media. For those of you that have not read it, you really should. Coming up in the next hour, we also speak to the chief executive of Ukraine's largest sunflower oil producer. So we're keeping the spotlight really on some of these soft commodities. Don't miss that conversation. That's shortly after 9:30 a.m. London time. Now, that's it for the European Market Open. Surveillance Early Edition is up next. France, March services PMI pretty much in line with estimates at 57.4. Also, we're getting the regulator in Switzerland talking about Swiss banks taking sanctions very seriously. So we'll talk banking as well. This is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
I got criticized for calling Putin a war criminal. He is a war criminal.
For the moment, it's passive, but he's certainly making a statement, and it's a statement about censorship.
The Russians obviously miscalculated the extent of Ukraine's resistance.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Piling on the pressure, the U.S. Treasury cuts Russia off from making dollar debt payments through American banks. Washington and Brussels weigh more sanctions. Nickel fallout. JP Morgan reviews its commodity exposure after last month's LME chaos. And stay with Bloomberg Early Edition. This hour we speak to the Legal & General Chief Executive Nigel Wilson and to the boss of the largest sunflower oil producer and exporter in Ukraine, the Colonel Chief Executive Levgen Osipov. We'll send in your questions on IB Plus TV Go. Now, first thing is first, so let's check in on the markets. We're seeing markets relatively calm. Now, European stocks actually advancing. U.S. equity futures also a little bit more elevated. We have a wonky double European stocks so that you really see the full extent of exactly what we're seeing, which is stocks gaining 0.3% higher, energy stocks following crude oil 0.7% higher. Now, we keep on looking at the inverted yield curve on various parts of the markets to give us a sense on whether we should panic a little bit more. Markets move really continuing to be shaped by the ramification of the war in Ukraine and, of course, being shaped by tightening monetary policy as well as raw material cost stoking inflation. So this is a picture across the board. I don't know whether we do have the European map. If we do, let's get to that. We also need to look at technology. A lot of the talk today will be on what Elon Musk is trying to do. All right. So that's across asset. If we have the European MAC, let's bring it up. Otherwise, we continue with the war in Ukraine, and the U.S. says it might impose further sanctions this week on Moscow as the world's attention focuses on allegations that Russian troops executed civilians in Bucha and other towns.
You may remember I got criticized for calling Putin a war criminal. Well, the truth of the matter, you saw what happened in Bucha. This warrants him. He is a war criminal. But we have to gather the information. We have to continue to provide Ukraine with the weapons they need to continue the fight. And we have to gather all the detail so this can be have a war crime trial.
Now, Russia denies its forces killed civilians. For more on what, of course, is going on, Bloomberg's Europe correspondent Maria Tadeo joins us. So, Maria, condemnation growing over these alleged Russian atrocities, both the U.S. and Europe promising more sanctions. How effective can they actually be?
Well, Francine, the biggest question until this point is the European Union and the United States promised the mother of all sanctions. But the reality is, until now, Russia has continued to service its debt, and of course, it continues to sell oil and gas to the European Union. So the political pressure now, after the pictures in Bucha, is growing to put an end to that and actually come up with very effective, rough sanctions on the country. We know in the part of the United States, they're moving to block payments of U.S. dollar denominated from U.S. banks in the U.S. That would force Russia to either use its reserves or essentially default on its debt. And then when it comes to the European Union, Francine, tomorrow there will be a very important meeting here in Brussels of ambassadors to decide whether or not this time around they want to touch energy. But again, we know the reality about this. It's very divisive. The Germans, up until yesterday, we heard from Christian Lindner, say we're not ready to cut off gas. And today, the French Finance Minister Bruno Le Maire saying it is clear that we don't have unanimity at this point.
So, Maria, the U.S. warning that Russia may have changed its plans to concentrate its forces on Ukraine's eastern region. Where does this leave peace talks?
Well, Francine, and that was, by the way, very much reflected this morning by the General Staff of the Army of Ukraine, saying that retreat from the west means they're focusing now on the east, and there's very heavy fighting across the Donbass. In fact, the Ukrainians expect a major operation from the Russian army to try to lock their control of Donetsk and Lugansk. Now, Francine, when it comes to the peace talks, what we're seeing as the reality is we're very far from a ceasefire. The fighting continues on the ground, and for the Ukrainians, they believe that a lot of this is part of the tactics before the real talks begin, that Russia will try to really get control of the east, come in with talks or to the talks with that leverage, and then at that point you get into the serious stage of negotiations. But of course this means that the fighting and everything that it entails in human lives could continue for weeks.
Maria, thanks so much. Maria Tadeo there in Brussels. Now, Bloomberg has also learned that the U.S. Treasury has halted dollar debt payments from Russian government accounts as U.S. financial institutions. Now, joining us are Bloomberg Markets editor Christina Kino and Valentin Marinov, head of G10 FX research at strategy at Crédit Agricole. So thank you both for joining us. Christina, I mean, this does not leave actually a lot of choices for what Russia does next, in whether it defaults or pays it using revenue or actually some of their reserves.
Absolutely, Francine. It really does corner Russia into a couple of options that they really probably do not want to make at this point. But I think that's the whole point of Treasury developments overnight, is to really up the ante on that front. And, you know, I think there's been a bit of a sigh of relief over the past month, because initially the questions with regards to the sanctions was that whether Russia was able to service its debt. And they've shown repeatedly over the past month that they have been able to make those coupon payments. They've been able to make principal payments. But now that again raises that question, and for investors it really will be again a question of, is Russia going to have to default on its debt or not?
I mean, does it mean, Christine, that actually, you know, I guess bit by bit sanctions are being put up so that the pressure will go up and markets don't seem, especially on the stock side, don't seem to have noticed?
Yeah, I think that's absolutely correct, Francine. The way to characterize it is kind of it's incremental steps that we're seeing from various governments here with regard to Russia sanctions. Certainly on the bond payments front, that's what we've seen as well. Initially, prior to this action overnight, Treasury had indicated that it will have exemptions in place until the 25th of May for these transactions for Russia bond payments to get carried through. That kind of just is out the window now after the overnight developments. And so again, I think it's now a matter of those incremental steps kind of adding up to really build the pressure on Russia at this point.
Yeah, and Valentin, this is having a huge impact on, of course, most of the foreign exchange and some of the currencies that you're watching. How much more volatility are you expecting?
Well, I mean, geopolitical risks are here to stay, and there was a period where we did see those risks subsiding, but following the latest developments, any renewed sell-off in the ruble in particular could indeed spike FX volatility. Historically, the euro, Swedish crown in the G10 space, but also Central Eastern European currencies with those massive economic exposure to both Ukraine and Russia, dependent on Russian gas, will likely bear the brunt of any correction there, yeah.
So if you look at the oil-rich countries, something of Canada, if you look at Norway and some of the others, what happens to those currencies?
Well, it is the case that, as unfortunate as it may be, the war in Ukraine has ushered in a whole new template for the FX markets. We're in the world of where you buy high-yielding currencies of energy exporters. I would add the Australian dollar to the ones you've mentioned, and you essentially fund those purchases by selling euro, but also the Japanese yen, low-yielding currency of an energy importer. And that is here to stay. The one thing that is allowing that is the fact that risk sentiment remains remarkably resilient. So a potential spike in FX volatility could potentially derail that for a time, but ultimately those currencies could emerge as the biggest winners from what's happening at the moment.
And Christine, let me bring you over to a chart that actually Valerie put together, which is looking at some of stocks. So I think we're breaking it down in Europe, UK, US, and MSCI, and how they've been performing since the beginning of the war. If we can bring it up, I'll show you exactly what it tells us, and it does seem to have recouped a lot of the losses. What's the next, I guess, fault line for stock investors right now?
Well, Christine, I think now, it would have to be kind of going back to those original catalysts earlier in the year. Again, the path of Federal Reserve policy very much still on the radar for investors, in addition to risks related to Russia and Ukraine. And I think the combination of this has muddied the picture a little bit for investors. I think for a time there was this notion that what we're seeing in Ukraine could potentially slow the process of policy normalization. But we've heard from several Federal Reserve policymakers over the last few weeks that they really are driving home this point that, look, 50 basis point rate hikes, potentially multiple rate hikes of that size could be in the offing here, because they really want to get ahead of that inflation factor. And so, it's been a fight, I suppose, in terms of the prominent market catalyst between these two. But I think now the attention is shifting again to the Fed and what it's going to do next.
Yeah, all about the Fed. But I do want to ask you, before we get onto the Fed, Valentine, we have some of the Russian reserves. I don't know whether we have that chart, but again, it's a good chart and seeing how much they've used so far since the start of the war. Let's bring it up, and here it is. As if by magic, we have the Russia reserve drain. I mean, where does this economy end up? Do you look at Russia?
Well, on occasion we have to. I mean, it is the one place that's driving the markets at the moment, but they are slowly but surely running out of reserves. If anything, they have certainly run down their dollar debt, so they don't have to really use a lot of those at the moment. The latest restrictions, however, may indeed speed that up. It is the case that the Russian central bank, with their massive hikes and indeed the capital control restrictions, managed to stem the outflow. But the thing is, and as you said at the very beginning, the Western allies of Ukraine are trying to ever so slowly tighten the grip. And one of the consequences of that would be Russia slowly but surely running out of reserves, as they indeed have to rely on their onshore reserves to repay their FX debt down the road.
All right, so thank you both. Our Bloomberg Markets editor, Christina Kino, and Crédit Agricole's Valentina Marinoff, even, if I can speak. I need an espresso. Both stay with us. Twitter, this is what it's doing in pre-market trade. A lot of chatter on Twitter on the back of Elon Musk now being the biggest shareholder. He was tweeting about whether there should be an edit button. But then if you look at a lot of the news around it, it's also he'll be a passive shareholder. So we were wondering, you're the world's richest man, you only take a 10% stake, and you're really going to sit on your laurels and be passive, or are you going to change what the strategy, and also, as he's been saying on Twitter, go for more free speech? Now, Smart Conversations continue on Bloomberg Surveillance Early Edition. This hour, we speak to the Legal and General Chief Executive, Nigel Wilson, to the boss, also the largest sunflower oil producer and exporter in Ukraine. That's the Colonel Chief Executive, Levgen Osipov. Send in your questions on IB plus TV Go. This is Bloomberg.
city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
All eyes are on not just Russia and Ukraine, but all the rest of us in terms of how we're going to react. And there's a complex set of dynamics at play, certainly on the economic front.
Well, that was Catherine Tai, U.S. trade representative, speaking exclusively to Bloomberg. Now back with us, Bloomberg Markets editor Christina Kino and Valentin Marinov, head of G10 FX Research and Strategy at Crédit Agricole. So first of all, Christina, when you look at some of the dynamics, and we're talking a little bit about the fact that it's not the same catalyst for stocks than it is for bonds, everything, of course, is underpinned by inflation and forecasts of what the Fed does. Are we seeing banks kind of more aligned than they were just a couple of months ago as data comes in?
Absolutely, Francine. I think, people now are really coming to the realization that inflation is here to stay. It's no more transitory, which was the discussion, point of discussions a few months ago. And so I think investors have now had time to adjust really their strategies for that. We are starting to see, for instance, even in the equity space, start to think about what would be kind of the inflation hedges within that space. We're starting to see people thinking about companies with good cash flow, good pricing power, that they're able to pass on costs to investors. And in the bond markets, the question that's being asked at the moment is, have bond yields really risen enough to compensate for that inflation bite for investors? We're already starting to see people asking the question of whether it's time to go back into 30-year Treasury yields, which we know have had a really massive run-up, and Treasuries in general have had a record quarterly loss in the first quarter. So you're starting to see some signs of bargain hunters and bottom fishers at this point.
Yeah, and if you go back to what it means for currencies, I mean, first of all, what's it mean for dollar? Does the sanction have a ripple effect? Because, a lot of countries around the world say, look, they're no longer reliable as a reserve currency, so I want to get out.
Well, I mean, it is having an impact. And one interesting consequence of what's happening is that many emerging markets are now essentially considering their dollar exposure as making them vulnerable to future dollar sanctions. So essentially, there is a temptation that they could actually follow in the suit of the Russian central bank, really reduce that dollar exposure and do what they want to do, pursue a more independent foreign policy. I'm not saying starting a war, but still. So from that point of view, there's a bit of a clash between the role of the dollar as the king dollar, king of the G10, and the role of the U.S. Really as the sheriff of the global world. And ultimately, all that may boil down to a situation where we could have a global economy which is split in economic blocks that have less use for the dollar as a global transaction currency, which could mean that the role...
How do you play that then?
Well,
lower yielding currencies?
Well, ultimately, it's the case that you have to be looking for replacement proxies. You're buying the renminbi, you're buying the euro, for the time being, still the most liquid proxy with its own problems. But the renminbi so far has been the biggest beneficiary by far, and that's likely to remain the case.
But that's also divergence play, right?
But it is, in a way, it's the case that if you imagine a world which is dominated by certain superpowers and by implication their currency is dominating the transaction flows there, these will be the biggest challenges to the dollar in the next 5 to 10 years.
Christina, how should we look at oil right now?
Well, yeah, it's very interesting, Francine, because the knee-jerk reaction, of course, is higher on the back of potentially more sanctions, and you can understand that anything that kind of is an indication of potential escalation in the conflict would boost oil. But I think just looking at the comments themselves from what we've heard from the EU and the US, again, you know, these are small steps, incremental steps that they're taking, and not necessarily automatically amounting to the biggie, really, which investors are watching out for, which is potential just en masse oil embargoes for anything that comes out of Russia. But, you know, that's certainly not something that Europe, for instance, would want to do at this stage, considering how much they're getting from Russia. And so there is potential for investors at this point to over-egg and over-interpret what we're currently hearing the sanctions front and translating that into a higher oil price. I just question the sustainability of that at this point.
I love his setup. We're going around the world in like 90 seconds. What do you do with yen? Do you play it against Aussie dollar or
Aussie dollar, definitely. I think
not US dollar.
Well, US dollar is quite a bit overdone, overvalued, overbought. I mean, Aussie could go to 80 cents per dollar. It still has further to go according to our models, and the yen is already quite a bit undervalued there. It is the case that the BOJ is getting a bit uneasy about it. The MOF really has been really on it last week. So it is also the case that historically, at least, when you get a very undervalued yen, really the Japanese investors, the biggest buyers of treasuries that have been doing so unhedged, they start to worry about a downside risk. So essentially, any future flows from here into the US Treasury market from Japan likely to be hedged, and that's going to weaken the positive correlation between Treasury yields and dollar yen. So I think the best days of that trade are behind us, as in long dollar yen. So look for alternatives. Aussie yen, yes, definitely, yeah.
Thank you both for joining us. Valentin, thank you so much for that great insight. Our Bloomberg Markets editor, Christina Kino, and Valentin Marinov, head of G10 FX Research and Strategy at Crédit Agricole. Do you like it how I pronounce it the French way? I don't know why I need to, but I feel like, you know, it cheers up Valentin. Plenty more still to come on Bloomberg Surveillance Early Edition. This hour we speak to Legal & General Chief Executive Nigel Wilson and to the boss of the largest sunflower oil producer and exporter, Colonel Chief Executive Levgen Osipov. Send in your questions on IB Plus TV Go. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, JP Morgan said to be reviewing its business with some of its commodity clients, a move that could actually drain more liquidity out of the sector. This is after last month's nickel short squeeze. Well, joining us now with the very latest is Jack Farchi, a world-renowned author with our Javier Blas, also an energy and commodities team reporter. Now, Jack, first of all, what does this move mean for the already very turbulent nickel market?
Well, JP Morgan is a huge participant in commodity markets, and particularly in metals markets. There aren't that many banks that play a big role in metals, and JP Morgan is, by a long way, the biggest. Now, the story that we have this morning, it's saying that JP Morgan is reviewing its exposure in commodities. It's doing additional due diligence on a number of its clients, looking again at some financing deals. So we're not saying that JP Morgan is getting out. But it's going to be a concern, certainly, for commodity markets and particularly metals markets, where liquidity at the moment is really very thin. I mean, you can see nickel in particular. Yes, the market has reopened after that massive short squeeze, but it's essentially not trading. You're trading a few lots a day. The price is barely moving. There's not an awful lot of activity happening on the market, and that's a pretty worrying and illiquid image of what is, a huge global market that matters a lot for the world economy.
So, Jack, what's the concern right now? Is there a big margin call coming that could send metal traders running for the hills?
Well, I think we saw it in early March in nickel with Tsingshan, this big Chinese, the world's largest stainless steel and nickel producer. Had a big short position, turns out a very big short position in LME nickel, and it got squeezed. But that happened in nickel. It could happen in other markets. Russia is a huge producer of commodities. As sanctions are ratcheted up on Russia, as seems to be happening, there's more and more risk of large price moves. And anyone who has big positions on commodity markets could be at risk of some moment when they can't pay their margin calls, and suddenly you see markets doing these extremely volatile things and blow-ups happening. So I think it's a risk that everyone involved in commodities is extremely aware of and worried about at the moment.
Jack, thanks so much. Bloomberg's Jack Farchi there. Now, still to come, we speak to the Legal and General Chief Executive, Nigel Wilson, and to the boss of the largest sunflower oil producer and exporter, Colonel. The Chief Executive, Yevgeny Osipov, of course, joins us a little bit later on. Send in your questions on IB Plus TV Go. This is Bloomberg.
Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft.
SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Piling on the pressure, the U.S. Treasury cuts Russia from making dollar debt payments through American banks. Washington and Brussels weigh more sanctions. Nickel fallout. JP Morgan reviews its commodities exposure after last month's LME chaos. And stay with Bloomberg Surveillance Early Edition. Up next, we speak to the Legal and General Chief Executive, Nigel Wilson, and to the boss of the largest sunflower oil producer and exporter in Ukraine, the Colonel Chief Executive, Yevgen Osipov. Send in your questions on IB Plus TV Go. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, first thing is first, so let's check in on the markets. Actually, when you look at what stocks are doing, they seem to stay pretty much calm in certain parts, also even elevated. It's certainly the energy stocks that are giving a boost to the rest of the markets. Bonds are retreating amid worries about inflation and the policy response. So if you look at the pattern that we've seen over the last 2 weeks, market moves continuing to be shaped by the ramification of the war in Ukraine and tightening monetary policy as these raw material costs are stoking inflation. Now, we, of course, begin with the war in Ukraine. The U.S. says it might impose further sanctions this week on Moscow as the world's attention focuses on allegations that Russian troops executed civilians in Bucha and other towns.
You may remember I got criticized for calling Putin a war criminal. Well, the truth of the matter is so it happened in Bucha. This warrants him, he is a war criminal. But we have to gather the information. We have to continue to provide Ukraine with the weapons they need to continue the fight. And we have to gather all the detail so this can be have a war crime trial.
Now, while a consensus is forming that the war in Ukraine is a pivotal moment for ESG investing, a UK review is arguing that an H should also be added to the mix to represent health inequity. Now, the report published by insurance giant Legal and General and the University College of London Institute of Health Equity says ill health reduces productivity. Well, to tell us more about that is the Legal and General Chief Executive, Nigel Wilson. Nigel, so great having you in the studio. So thank you so much for coming on to talk about the report. I mean, first of all, there does seem to be a consensus, forming that it's pivotal that we look at things like the S and exactly what's happening in Ukraine in the investing. Do you agree?
Yes, yeah, and health is another part of that equation.
And so what does that mean in terms of health? I mean, first of all, if we just focus on how the war in Russia is changing ESG, will it change the way that we deal with autocracies? Does ESG need to be much more mindful of the good and harm that it's doing?
Indeed, I think that's the trend we're seeing, aren't we, right across the world? And it's very sad what's happening in Ukraine, and desperately sad at times. But actually, it's coalescing the good, and that people really want to do the right things, the right reasons, delivering right outcomes, which you've heard me say for many years with you.
So talk to me about the H that you want to add. Is it adding to ESG, or is it a part of ESG that needs to look at the health?
I think we're trying to add it to, because health is wealth, and people really understand that health really matters. And we in the UK, a bit like America, blessed with fantastic universities, do amazing research and whatever. And the background to this is Michael Marmot did a brilliant report in 2010 and revisited it in 2021 and found virtually on every measure we'd gone backwards. And we started having a discussion, dialogue with them, and how can we help as, you know, as somebody who has enlightened self-interest, because we all want happy, healthy, productive employees working for purpose-led organizations. It's sort of 101 of business right now, and this is part of the mechanism of getting us all there.
Yeah, so how do you measure it, first of all, would be my first question. It's extremely difficult. And do you not measure it through, you know, wealth, or is there a GDP metric that could work?
I think we're not short of metrics, believe it or not. And the university's got lots of metrics that they've been using, broken down by different demographic groups and whatever. And some of them are subjective. That's part of the problem, and therefore the historical data is quite subjective. But increasingly, we want to measure really what's happening in different organizations and being able to benchmark. And it's a bit like climate change a few years ago, the Scope 1, Scope 2, and Scope 3 in health, virtually parallel to climate. We've seen such a positive response to that across the world, very different from a few years ago, where we think health needs to be categorized in the same way.
But Nigel, so this would be what for? Is it in terms of investing? So is it investing in a company and for employees, or is it investing in a country? And again, is this because of COVID? Because health is very difficult. I mean, first of all, the data around health is extremely difficult. It's just if you have the money once you become ill to cure yourself.
Yes, yeah, that is one of the problems. I guess corporates in general, big business, is doing a pretty good job, and you know, this is a fantastic example. This used to be our building. You know, for 60 years, this is where we were. Bloomberg had done an amazing job making this a fantastic place to work with, healthy food, and health exudes out of this building. When we had it, it was rubbish, very bad work environment, and it wasn't living up to anywhere near our standards. So we ended up moving elsewhere and having a much better working environment. And all those things about let's all pay the living wage. In fact, let's all pay the living healthy wage for people so they can actually live a healthy lifestyle right now. Because the point you made about economics is true. We sort of tested this with a number of corporates, and everybody was up for it. I mean, the problem is not the Bloombergs and the LNGs of this world. It's the thousands or hundreds of thousands of SMEs who are not doing this. And, you know, poor health is terrible for productivity. We've got a huge productivity problem in the UK. And we found, actually, in the data that, you know, regionally, there's a huge difference in productivity. And a lot of that's, you know, 30% of that's correlated with health.
But, Nigel, this should be addressed by the government, right? This is why you have your rules and regulation and minimum wage, and they should be taking care of employees.
They should be, in one sense, but actually we've always taken a view that we're very happy to roll our sleeves, as you know, and get stuck into these really big policy issues and try and make a difference. And we've done that in, you know, in housing and regeneration in lots of areas. You know, we've got tons of money to invest around these ideas. But we're finding this narrative resonates everywhere, and that people really want to step up and try and figure out how.
Well, does it resonate with chief executives? Because it also means, but it means that you're paying your employees more, and that leads to wage inflation.
No, I think that's a very old-fashioned view of it, to be honest. Is that
I'm very old-fashioned.
Yeah, people want to be productive and healthy and happy, and they want to feel, you know, pumped up when they come to work. A lot of people are missing it. I'll be missing coming here and getting grilled by you. So nice.
And we're pumped
today. But we need to change, and we need to change for the better. And COVID was a catalyst for that. And the fact that actually in 10 years, and Gordon Brown worked with Marmot on that a long time ago, nothing's happened. Not enough.
I guess my point, Nigel, is that if you're a small and medium-sized enterprise chief executive, you can see your people, so you want them happy. If you don't, do you really need a metric to measure it, or do you say, "Hey, John, how's it going? Like, what can I help to make your life easier?"
You know, we were in Manchester yesterday, and actually, SMEs desperately need to actually. How do we do this? How do we make it happen? Big companies can make it happen. And what's the benefit? And how do, you know, people don't want big sickness and absenteeism. They don't want massive staff turnover. They don't want long-term sickness in there.
And they want loyalty.
They want loyalty. They want loyalty, absolutely. And mental health is absolutely growing exponentially amongst all the demographic groups. And we know that there's massive stress in the workplace right now, and we've got to resolve that, and actually purposefully resolve that.
So do you think COVID has actually changed our relationship with employees?
Yes.
Has it changed the social contract with government?
Yes, absolutely. And I think we're trying to figure out what's the rules and how do we capture all that positive momentum and put real money behind this, so really making a difference. That's why, you know, we've got the partnership with UCL, fantastic, another one with Edinburgh, and Scotland has great data. That's why we partnered with Edinburgh. Newcastle University, Bristol University.
Nigel, do you believe in the Great Resignation? And is that, is there going to be a workaround that people are fed up and actually if they're not treated right, they'll just leave?
I think there's a massive macro trend, particularly along younger people, that they want to work for purposeful organisations and feel their jobs really purposeful. And that in one sense is fantastic. We're not seeing the great resignation in the data. I mean, there was so few people resigned, for the last 18 months.
Yeah. Is it coming now?
But is it coming now? We've not got it in our data. And it's interesting, the discussion we had a major CEOs of companies who represent 1 million people in employment in our office the other night discussing this. They're not seeing the great resignation. They're prepared for it. They're preparing for it. They're seeing a catch-up from the last 18 months, much more so.
All right, Nigel, always fun to catch up. Grilled, you see, I miss this. This is what you can do when it's back.
I'm so excited. I've got powder on my face first time in 2 years.
What are you doing next Tuesday at 9 a.m.? Nigel Wilson there, Legal and General Chief Executive Officer. Now, let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. New research shows the Earth may warm by more than 3 degrees Celsius, which is twice the international goal enshrined in the Paris Agreement. The report from the Intergovernmental Panel on Climate Change warns on still unchecked emissions of greenhouse gas pushing to record levels. IPCC scientists say emissions must peak before 2025 to keep climate targets alive. Now, Shanghai was reported more than 13,000 daily COVID cases for the first time as a sweeping lockdown and mass testing of its 25 million residents does continue. The outbreak in the financial hub pushed the national total to more than 16,000 infections for Monday. Now, that's the highest one-day figure recorded in China during the pandemic. JP Morgan is said to be reviewing business with some commodity clients after last month's nickel short squeeze, in a move that could threaten to drain liquidity out of the sector. Management has ordered a fresh due diligence on some existing clients, including metals traders and oil refineries. The US Bank is one of the largest players in global commodity markets and the biggest in metals by far. Global news 24 hours a day on air and on Bloomberg QuickTake, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Coming up, Russia's invasion of Ukraine has caused a crisis in sunflower oil. We speak to the Chief Executive Colonel, Ukraine's largest producer of sunflower oil, next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Russia's invasion of Ukraine has disrupted the supply of almost half of the world's sunflower oil exports, forcing companies to turn to alternatives such as palm oil in products ranging from potato chips to cookies. Well, joining us now to discuss the disruption is the chief executive of Kernel, Ukraine's largest sunflower oil producer. Evgen Osipov, the chief executive of Kernel, thank you so much for joining us. First of all, our immediate thought goes out to everyone in Ukraine and, of course, some of the disruption and loss of life that we're seeing. Give us a sense, Mr. Osipov, though, of any kind of longer-lasting infrastructure damage by the war to the operations of Kernel.
Thank you for the invitation. And I want to say that now with current situation, we don't have such a big damage of our infrastructure. But this moratorium of the ports facilities, it's bring a huge impact on the future of sun oil production in Ukraine and our supply to all other countries in the world.
So more generally speaking, are agricultural facilities actually sustaining damage across Ukraine, or is it fairly contained at the moment?
If we speak about the current infrastructure, is still in a good condition, and we estimate the damage less than 5%. But at the same time, we're speaking about the current season of planting. Our estimation is reducing by 20% of planting areas in Ukraine and decreasing the yields. And it's bringing us to the numbers that even in the last year, Ukraine produced more than 100 million tons of grains and oilseeds. And in this season, our estimation is not more than 60 million tons. It means it's 40% less compared with the last season.
And this would be for the spring planting across Ukraine. And so, of course, the effect would be pretty immediate in a couple of months or next year, actually. So, Yevgen, talk to me a little bit about, are you able to export at the moment the supply you have through rail and trucks outside Ukraine?
It's a huge challenge for us now to supply our goods for the market. Because before, for example, Ukraine export around 500,000 tons per month, and now we export 5% of this volume. And we believe that we need some time to build the new logistic chains through the west border, but it brings the time, and in any case, it's reduced the volumes of supplying oil to the market and grains as well.
But so in terms of actually exporting some of the things, I don't know how much sunflower oil you have at the moment. How much, if it's difficult via train and rail, is it possible via sea, or is it just containers of sunflower oil that are sitting in Ukraine with nowhere to go?
Now the Black Sea port is blocked, and we have only one possibility to make export through the west border. And the capacity of this logistic chain is not more than 10% compared with the volumes that we need to export from Ukraine through the seaports. And it means that we will reduce the amount of export by 10 times compared with volumes before the war was started.
And this is immediate. What happens afterwards? I know you're planting less, and actually, if you're not able to export this, who will pay the cost of it?
Yeah, it's true that in such case, we will have a huge stock inside in Ukraine, and we have no stock and no goods for the market outside the Ukraine, and it's a big damage for the production, for the food security of the global world, and it's a big problem with liquidity for the companies and for the farmers inside in Ukraine.
I'm not an expert in sunflower oil, but how long can you keep it for before it turns? So if relations with Russia gets better, are you able to export it still in 3, 4, 6 months from now, or does it perish?
Yeah, we are able to export it in 3 or 6 months from now, but you know that nobody knows how long does the situation will be in such condition like now with closed ports.
Yevgen, have you spoken to any of your usual buyers? How will global buyers make up for the shortfall of sunflower oil?
Yes, every day we have talks with our buyers because they're waiting for our oil worldwide in the Europe and in the Asia. But now we don't have capacity to supply these volumes, and we need to stop the contracts. And this is the same position with other production companies in Ukraine, and it's a huge damage for our logistic chains and for our infrastructure of our cooperation with our partners.
Have the buyers told you that they're buying sunflower oil from elsewhere, or are they switching to another type of oil in the hope that your production comes back online?
You know that it's impossible to buy sunflower oil from some other origination because Ukraine is the #1 sunflower oil exporter in the world. Yes, our buyers switch to the other types of oils like rapeseed oil, soybean oil, and palm oil. Yeah, it's true.
All right, thank you so much, Yevgen Osipov there, the Chief Executive Officer of Kernel. And of course, we'll keep on top of exactly what's happening in terms of plantation and look, of course, at sunflower oil futures as well. Thank you, sir, for joining us. In the meantime, we're just getting some breaking news from the Commission President and Mr. Borrell, both saying that they will travel to Kyiv this week as peace talks are ongoing, but for the moment, not very productive. Now, coming up, Elon Musk becomes Twitter's largest shareholder and the world's richest person already, has ideas for how to shake up the social media platform. So we'll have that story next. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Elon Musk has become Twitter's largest shareholder, and the world's richest person already has ideas for how to shake up the social media platform. By the way, he says he's not the richest person because he gave an interview saying it was Putin, but that we don't know. Joining us now is Bloomberg Intelligence Media and Tech Analyst Matt Bloxham. Matt, first of all, I'm obsessed with this story because Elon Musk has been tweeting about it, saying like, you know, does this social media platform, I don't know if this is his voice, but, you know, does it have free speech? Does it need to change? And now he's talking about the editing button. So is it a personal gripe? What are his motivations behind it?
Yeah, I mean, I think obviously probably it's certainly not financially motivated, given that whether he's the richest or not the richest man in the world, he's very rich. So I think investing $3 billion or so in Twitter is neither here nor there. So it really is about his kind of broader, I guess arguably altruistic aims for society as a whole. And, you know, clearly free speech has been a sensitive topic for him. Perhaps he feels that by having a big shareholding in Twitter, he has more agency in that debate with regulators and policymakers about what a social media platform should be, how it should operate, what it should be allowed to do and not do.
I mean, I like the polls. I think last time I checked on whether we need an editing button, I think there was like almost 2 million people that, you know, were into it or not. So if you're a 9% shareholder, the biggest shareholder, but you say you're passive, how much influence do you have?
I think he has a lot, and probably a lot more than your typical 9% shareholder. I think because he has such a big following, and he can use those two things to become a kind of, I guess, a passive plus shareholder, if you like. You know, so that there's an AGM coming up. I think it's too late for him to kind of have any direct influence on that, but he's got a big vote in that now, and he can probably tweet ahead of that about some of the resolutions that are there and perhaps get a bigger following. So I think he can start to exert his influence quite quickly on the direction of the company, its strategy, whether an edit button comes or not. But I think it's a way of him demonstrating that he has power and influence over what they do.
I mean, could you see another platform coming on? I know, you know, Trump was also trying to do something. Is this like the beginning of a disruption of social media once again?
Potentially. I mean, I guess obviously we saw TikTok come from absolutely nowhere through the pandemic. So I think that the beauty of the internet is that there really are very few barriers to entry. And if you get the right kind of proposition, then you can really kind of grow at an exponential rate. I think it's perhaps harder in that kind of domain of you know, kind of traditional social media platforms. I think it'd have to be something fundamentally different that catches the younger generation to kind of really become a big scale platform.
The younger generation, like us, Matt Bloxham. Bloomberg Intelligence Media and Tech Analyst. I don't know why you're laughing. You have Bloxham there with the very latest on social media. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller, Katie Lyons in New York, or Danny Berger here in London. And this is Bloomberg.
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 juta tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions. Front Row. Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The Russians obviously miscalculated the extent of Ukraine's resistance, which has been heroic.
All eyes are on not just Russia and Ukraine, but all the rest of us in terms of how we're going to react.
We must step up pressure against Russia, and we must step up our support for Ukraine.
This is Bloomberg Surveillance, early edition, with Anna Edwards, Matt Miller, and Kayleigh Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Tuesday, April 5th. Our top stories today. The U.S. Treasury is making it tougher for Moscow to pay bond investors. It's halted dollar debt payments from Russian government accounts at U.S. banks. A move by J.P. Morgan could drain even more liquidity out of the nickel market. The bank is reviewing its business with some commodity clients after last month's nickel short squeeze. And Twitter's largest shareholder has asked his followers whether the service should have an edit button. Elon Musk conducted the poll hours after he revealed a 9.2% passive stake in the company. Welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London, in for Anna Edwards, Matt Miller, and Kayleigh Lines in New York. And Kayleigh, the market's attention once again turns to the threat of sanctions, but the session started out quiet with much of Asia on holiday.
Yeah, and the stocks that were open in Asia, or at least the markets that were open in Asia, largely moving higher, Danny. You had the MSCI Asia Pacific Index higher for a second day, up by about 0.2%. But once again, it was a move really led by technology. The Hang Seng Tech Index up 5.4% in Hong Kong. A lot of optimism around potentially progress being made on those auditing rules and therefore easing of concerns about any delisting of Chinese companies in the U.S. Of course, the other news out overnight was from the RBA, Australia's central bank, leaving rates on hold but opening the door to an earlier hike by removing the word patient from its policy statement. So that sends a hawkish signal and it rippled through Australian assets, including the short end of the bond market in Australia. The two-year yield up about 11 basis points at 195, 196 or so. That is the highest for the two-year yield going back to 2018. And then finally, the Aussie dollar, far and away the outperformer among G10 currencies. It's stronger against the U.S. dollar by about 1.3%, trading right around 76 cents, Matt.
All right, interesting look at Asia there. Here in the U.S., we don't see a heck of a lot of movement on S&P futures, but we do have a warning sign that I think a lot of people are starting to pay attention to in the Dow Transportation Index. It's down 4 days in a row, the longest set of losing sessions consecutively since December. And you know, if you're old school, transportation theory, Dow theory may give you a pause in terms of the bear bull market, the bear bull run. U.S. 10-year yield right now up a couple basis points, 4.8 to be exact. 244.31 is your level there as investors feel comfortable enough to let go of some of that debt. On the other hand, we have oil rising again today, so up 1.5% to 104.91 right now. And then Bitcoin also gaining only 0.75%, but still holding at a relatively high level, 46,653. So these seem to be the yield and Bitcoin possibly risk-on signs. On the other hand, futures not doing much and crude rising again could worry investors along with the transportation index. Danny, what are you looking at in terms of Europe?
It is really similar in terms of Europe not getting that strong risk-on or risk-off signal because there's a lot of divergences within the regional benchmarks. For example, DAX is up about 0.2%, but then on the flip side, you have the CAC 40, the UK stock index. Those are also moving lower. Now, a lot of the turmoil under the surface has to do with this energy play. A lot of oil-related stocks, per that oil price you just showed us, Matt, are moving higher. The threat of sanctions means oil is moving higher. Also, a lot of renewable energy companies outperforming in Europe. But the worst performing sector today is the basic resource index because of potential sanctions yet again, meaning oil and gas companies will find it hard to do business. So on a headline level, Europe stock 600 up just 0.3% with that turmoil under the surface. Now, the macro story also very important here with that higher inflation if there are more sanctions. The ECB now has to look at raising rates sooner, getting back to normal sooner. Vessler, one of the governing body members of the ECB, saying late yesterday that he would potentially see negative rates ending by the end of this year. So you have this big sell-off in European bonds. German 10-year yields, those are up about 3.5 basis points, 50.5154% is where we stand. Gilt yields, those are also up about 5.5 basis points as well. All of that also translates into a euro dollar, which had been stronger against the dollar. However, that's now starting to fade as we've moved through this session. So euro dollar at 1.968. Now, when it comes to Russia assets, obviously a very distorted market. It continues to be so. But again, these concerns over sanctions are hurting Russian stocks a bit. We also had really weak PMIs, the weakest services data for Russia since the onset of the pandemic and those lockdowns. Also a weaker ruble, but again, general dollar strength today. And you're also looking at 10-year bond yields for Russia up about 1 basis point, Kaylee.
All right, Danny, well, you mentioned the data we got out of Russia. We are going to get more data here in the U.S. in the day ahead. At 8:30 a.m. Eastern time, we'll be getting U.S. trade balance numbers, and that will be really in focus. Then at 10 a.m. New York time, Bloomberg's Michael McKee will be speaking to Kansas City Fed President Esther George in an exclusive interview. Plus, Fed Governor Lael Brainerd will also be speaking in a virtual discussion on the unequal impacts of inflation. And finally, Ukraine's President Vladimir Zelensky is set to address the United Nations Security Council and also plans to deliver an address to the Spanish Parliament, Matt.
All right, we will watch for all those data points and speeches. Now, Bloomberg has learned that the U.S. Treasury has halted dollar debt payments from Russia government accounts at U.S. financial payments. This comes after alleged atrocities committed by Russian troops in the Ukrainian town of Bucha were discovered. President Biden spoke about it yesterday.
You may remember I got criticized for calling Putin a war criminal. Well, the truth of the matter is so it happened in Bucha. This warrants him, he is a war criminal. But we have to gather the information. We have to continue to provide Ukraine with the weapons they need to continue the fight. And we have to gather all the detail so this can be have a war crime trial.
Anne-Marie Horder, Bloomberg's Washington correspondent, joins us now for more. So, Anne-Marie, what do we know about continued push for more sanctions?
Well, we're going to be hearing about more sanctions this week. According to Jake Sullivan, the president's national security advisor, after the president made those remarks, for all of us to keep a lookout. Jake said that they are working with their European partners, and there will be more sanctions to come this week. And then, Matt, what we have overnight, this is a Bloomberg scoop, is coming out of the U.S. Treasury. Basically, what they're saying is that Russia can no longer make payments they're supposed to make to overseas investors from Russian government accounts used and held in U.S. financial institutions. Now, remember, the U.S. already froze accounts of Russia's central banks and all those reserves they had in dollar-denominated currencies, euros, etc. But what they did have is carve-outs, so they could still make those payments to their investors. And now what they're saying is that is no longer allowed. And this came as a payment was due yesterday. And what the Treasury is saying, a spokesperson is saying, is that now Russia really has three options. They either have to drain the reserves that they hold at home in Russia, they have to use any new revenue they have coming in to make these payments, or they will default. This just increases the pressure on President Putin and really the economic situation on the ground in Russia.
All right, Bloomberg's Anne-Marie Horder down in Washington, D.C. for us. Thank you so much. Meanwhile, there's a new signal that China's President Xi Jinping may speak with Ukraine's Vladimir Zelensky for the first time since the Russian invasion. The foreign ministers of the two countries spoke yesterday. Meanwhile, the European Commission announcing this morning that EC President Ursula von der Leyen and High Representative Josep Borrell will be traveling to Kyiv this week to meet with Zelensky. Let's get more with our European correspondent Maria Tadeo in Brussels. So, Maria, what do we know about that planned visit?
Well, this is going to happen this week. A lot of the details are still pending, of course, all of it due to security reasons. But essentially what the European Commission and the European institutions want to do here by having Ursula von der Leyen on the ground meeting Zelensky is to really show that Europe is standing and supporting Ukraine. That's for the politics. But of course, the biggest question is what happens when it comes to the sanctions. Tomorrow, there will be an important meeting when it comes to potentially including energy here. But at this point, we have to make this very clear. There is no consensus yet on what that package should entail. It is also very clear that gas would be out of the question. So it really comes down to coal and oil. But again, what you really need to factor here is that when we talk about the European energy market, well, there isn't one. There's 27 different countries with 27 different systems and 27 different governments. And at this point, there is no unanimity behind any decision. So I would really refrain perhaps from making big assumptions about a big energy embargo, because it does seem from the information that we have right now that that is possibly not on the table.
All right, Maria, thanks very much. Bloomberg's Maria Tadeo there in Brussels. Now to a Bloomberg scoop. JP Morgan is reviewing its business with some commodity clients after last month's nickel short squeeze. The move threatens to drain more liquidity from the sector. Eddie Vanderwalt of Bloomberg Markets Live joins us now with more. And JP Morgan, obviously a monster in metals trading.
Absolutely. Absolutely. JP Morgan is a big deal in commodities, make no mistake. They are the biggest counterparty and a provider of liquidity in a number of markets. If they start pulling back, and we don't know yet that they will, but if they start pulling back, that will create a situation in commodities markets which are already really volatile, which are already seeing people step back because of that additional volatility and that additional risk, and it will just make them even harder to trade.
Well, along the same lines, it's been a headache for the LME and more headaches potentially coming for the LME. A great Bloomberg story about, yes, metals are still being traded through the LME, but more people are turning away. What risks could this pose for the metals exchange?
You know, it's really the full knock-on implications of the invasion in Ukraine and Russian assets becoming a little bit toxic. We really haven't seen the full implications of that yet, because we are now seeing a situation where a lot of people don't want to touch the metal, even though there aren't necessarily sanctions against them. But that just means that you're ending up with a two-tier system even inside the LME, and it makes it really difficult to trade metals and commodities which are already so volatile that a lot of people just don't know whether they should take exposure, Danny.
All right, Bloomberg's Eddie Vanderwalt of the Markets Live team, thank you so much. The headaches for the LME just seem to never go away. Meanwhile, Twitter is trading higher before the bell. That follows news that Elon Musk is now the social media platform's largest shareholder. And of course, Twitter saw the best day since 2013 yesterday on the back of that news. Joining us now for more is Bloomberg's Laura Wright. So, Laura, what's the latest? Who all has weighed in?
Well, Elon Musk putting his 80 million Twitter followers a newly announced stake in the social media platform to use by creating a poll asking participants whether there should be an edit button. So far, that poll has already received more than 2 million votes and a response from Twitter's CEO, Parag Agrawal, urging participants to please vote carefully. Now, Cathie Wood, ARK Investment Management CEO, she spoke to Bloomberg Radio yesterday. It's worth noting her flagship investment fund has almost 10% of its assets in Tesla. Take a listen to what she had to say about Musk making a statement.
I do think for the moment it's passive, but he's certainly making a statement, and it's a statement about censorship. He doesn't agree with censorship for a smooth functioning democracy, as he has tweeted, I believe. And so I think he's sending a strong signal to the new CEO. And I also know there's some controversy about why Jack left, having to do with this new CEO. So a few messages there.
Now, over at Wedbush, well-known tech analyst Dan Ives sees this as just the start, believing that Elon Musk will go on to take a more aggressive ownership form at Twitter. Meanwhile, over at Jefferies, brokers see Twitter's intraday gain as overplayed. But I'll leave you all with the musings from one Twitter user who believes Elon Musk is playing chess while the rest of the world are finding their checkerboards.
Laura, I have to just jump in here and ask, what was the response? What was the result of the poll? Do we need an edit button or not?
I think it looks overwhelmingly likely, Matt, that there's going to be an edit button. So good news for you.
All right, Bloomberg's Laura Wright, thank you so much. Now, of course, as we mentioned, Twitter is trading higher before the bell, but other social media stocks are actually moving in tandem, as they did yesterday. One of them being Snap, which was higher by about 5% in the Monday session. It's up another 0.6% or so in early hours this morning. Also moving higher this morning, cruise lines, specifically Carnival, really leading the way. The company announcing after the bell yesterday, it just had its best week of bookings on record. That is the week through April 3rd. So that lifting those shares to the tune of nearly 4% this morning. And another group of stocks I did want to check on is Chinese tech companies listed here in the U.S. Danny, you mentioned it and I missed it. I thought China was just closed overnight. Hong Kong was as well. So that big Hang Seng tech rally was from Monday. But of course, again, that is on optimism around the auditing rules, potential that these companies will not be delisted. And you are seeing the gains continuing in the U.S. session today. DD Global, of course, that Chinese ride-hailing company, up by about 1/3% before the bell, Danny.
Yeah, really in the Asia session, the only exciting thing was that Aussie dollar move off the back of the RBA. Kaylee, great roundup, and we're going to get back to the wider market conversation now that more markets are up and running with Asia on holiday. We're going to speak with Mark Tinkert, Huska Fund CIO. And later in the program, former UK ambassador to Russia, Andrew Wood, as more EU members think about increasing sanctions to Russia oil and gas. And of course, don't miss Matt and Kaylee on Bloomberg Crypto at 1 p.m. New York time. They're going to be speaking to Harvard professor and crypto skeptic Ken Rogoff, as well as the Association for Digital Assets Market CEO Michelle Bond. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon. Can ESA help humanity take its next giant leap?
The war in Ukraine rages on.
President Putin's invasion is brutal.
Turn to Bloomberg for up-to-the-minute reporting from around the world and analysis of what it all means to you.
The intention here is to increase the pressure on the sanctions front.
I think the United States policy is that the sanctions continue until President Putin is no longer there.
For continuing coverage from Ukraine and around the world, keep it tuned to Bloomberg Television and Radio.
Welcome back to Bloomberg Surveillance. We are simulcast on both Bloomberg Radio and Bloomberg Television. I'm Matt Miller here with Kayleigh Lyons in New York, Danny Berger out in London. Anna Edwards is off today. You don't hear much about Dow Transportation Theory, or Dow Theory anymore. I don't know why that is, but the idea goes like this. When you have a drop in an index that covers trains and trucks, now the transports index used to be the railroad index, that signifies bad things for the U.S. consumers. We're not ordering enough stuff. Factories aren't getting enough deliveries. We're not seeing enough production. And we've had a big slump in the Dow Transports Index, down 7.3% over the last 4 sessions. It's the longest streak of losses since December. And that could signal that this mini rally that we've seen, this bear market rally that we've seen is over here. That's the concern. Lynn Thomason joins us, Bloomberg Markets managing editor, to talk about this. Is it a warning sign, Lynn, still?
I think so, for sure. I mean, goodness, the Dow Jones Transport Theory has been around forever. And yeah, I mean, I think there's a good reason why people still listen to it. Clearly has, you know, a message for the U.S. economy. And it's, you know, if it's going down, I think there's messages that, you know, investors are concerned about what the economy is going to do next.
Lynn, we're just getting an email through 2 Bloomberg reporters from Russia's finance ministry, basically saying that oil and gas for March, the income there was about $3.6 billion less than planned. Certainly, Russian oil and gas has been top of mind with potentially increased sanctions. Are we at a point where traders are comfortable starting to price that into markets?
Yeah, I mean, clearly investors are pricing in what's going to happen next with Russian oil and gas. And that's, you know, the big theme that's driving everything across the board. You're seeing oil up today. And I think, you know, the interesting part is that it's clearly there in the sentiment, but what effect these sanctions take and what they actually do is still a big unknown.
Well, and obviously there's been a lot of volatility in the commodity market, Lynn. There's also been a lot of volatility in the bond market, and yet it seems that has calmed somewhat. We have a 2-10 curve that is back to only being inverted by about 1 basis point. What do you make of what we're seeing, or are we just waiting until the Fed minutes tomorrow?
I think we're waiting till the Fed minutes. You know, I think everyone is sort of on tenterhooks of what the yield curves are going to do. You know, you're seeing the question, you know, is Dow theory still relevant? Is the yield curve still something that points to a recession? And I think that's why everyone is talking about the yield curve right now.
Yeah, every day we get closer to ripping up those CFA textbooks. Lynn, thanks so much for joining us today. That's Bloomberg's Lynn Thomas. And of course, for more market analysis, MLive Go is where you want to head on your terminal. This is Bloomberg.
everyone you meet in Port Harcourt has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Danny Berger in London. Now keeping you up to date with news from around the world, here's the first word. The U.S. Senate has set Ketanji Brown Jackson on a path for confirmation to the Supreme Court this week. Debate begins today on the nomination of the first black woman to be nominated to that high court. Jackson's confirmation is all but certain now, as 3 Republicans say they'll vote in favor: Susan Collins, Lisa Murkowski, and Mitt Romney. In Shanghai, a sweeping lockdown of the city's 25 million residents and mass testing has uncovered extensive spread of the coronavirus. The city reported more than 13,000 daily COVID cases for the first time. China's current outbreak is surpassing a level not seen since February 2020. Bloomberg's learned that Citigroup has temporarily halted IPOs of new special purpose acquisition companies. The bank wants more clarity on recently proposed rules. Among other topics, Citi wants feedback about underwriter liability. A plan by the SEC to tighten oversight of SPACs could make it easier for investors to sue. And in sports, Kansas made history last night in New Orleans, beating North Carolina 72-69 for the NCAA's men's basketball championship. The Jayhawks rallied from a 16-point deficit, the largest ever in a title game. It's the 4th time Kansas has won the NCAA title. And Matt Miller, I came in 37th out of 40 players involved in the TV Newser bracket, so I failed miserably. But the winner of that TV Newser challenge, Bloomberg's very own Michael Barr.
Oh. The voice of Velvet.
Yes.
Michael Barr. Congratulations to him. Who was the loser?
Someone from a rival network who I shall not name.
Well, what about from our network? Who came in last in terms of Bloomberg?
That would be me. That would be me.
I see.
Matt.
Okay. Sorry about that.
Kaylee, I'm going to step up and save you here. Let's talk about what's coming up on the program. It's Mark Tinker, Tosca Fund CIO. This is Bloomberg.
nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance, the early edition. Here's what you need to know. The U.S. Treasury is increasing pressure on Moscow to find alternative funding sources to pay bond investors. Authorities have halted dollar debt payments from Russian government accounts at U.S. banks. So far, Russia has stayed current on its foreign debt obligations. A move by JP Morgan could drain even more liquidity out of the nickel market. The bank is reviewing its business with some commodity clients after last month's nickel short squeeze. JP Morgan teams are conducting due diligence on some existing customers. And Twitter's biggest shareholder has asked his followers whether they should have an edit button. Elon Musk conducted the poll hours after he revealed a 9.2% stake in Twitter. CEO Parag Agrawal responded to the poll by calling it important and urging users to vote carefully. I'm Danny Berger in London, in for Anna Edwards. Matt Miller and Kaylee Lyons are in New York. And Matt, I know yesterday the excitement in the U.S. market was all about Twitter, but obviously the macroeconomic implications of Russia and more sanctions taking hold in terms of market drivers today.
Yeah, first of all, obviously there should be an edit button on Twitter. I keep looking for that.
You know how Matt voted.
And secondly, like when I saw the sanctions news, I was like, wait, we didn't do that already? Wasn't that already a thing? But I guess not. In any case, there doesn't appear to be much movement in U.S. markets today, at least in terms of futures. We're still basically unched here, 45.74 on futures, down 0.07%. You do have a little bit of a risk on sign in terms of investors willing to let go of the perceived safety of government securities. Treasuries right now rising 2.4468%. The yield, I should say, rising. The price falling, of course, which is why it's red. NYMEX crude is up in the green, 1.4%. The gain to 104.78. So TI is trading at about $105 a barrel. And another risk on sign is Bitcoin. It's only up 0.8%, which in Bitcoin terms isn't much of a move. But the fact is, it's had this slow and steady rise, and it remains relatively stable, right? 46,672, the level here. And it's been just creeping up and not posting these huge volatile swings. Kaylee, what do you see in terms of pre-market movers?
Well, Matt, I look forward to digging into those Bitcoin's moves with you later today on Bloomberg Crypto, 1 p.m. Eastern time. Don't miss it. But of course, before that, we have to see the open of trading. And before trading opens here in the U.S., we are seeing some activity before the bell. We were talking about Twitter, all the optimism around Elon Musk's 9.2% stake. Twitter had its best day since 2013 yesterday, up 27%. It's adding to those gains this morning, up about 2.25%. And other social media stocks like Snap getting a little bit of a lift as well. It's up 0.4. Another group of stocks moving higher is the cruise lines. Carnival out overnight saying that it just had its best week of bookings on record. As a result, that stock up 3.5%, and it's giving a lift to some of its competitors or peers as well, including Norwegian Cruise Lines, higher by about 2.6% before the bell, Danny.
Kaylee, there's this point when technology was the best performing sector in Europe too, which kind of makes no sense at all if it's about Elon Musk taking a stake in Twitter, but perhaps cooler minds have prevailed in leading European stocks higher, which I should say the benchmark is up about 0.2%. Our energy stocks, thanks to oil moving higher, but a lot of that has to do with the renewable space. The best performing stock is Vestas wind system, which of course makes renewable energy sources. So that sanctions story really weighing and dictating the pace and moves of European markets today. So basic resources, those are on bottom of the pile as we look at energy, at material companies rather having to deal without access to Russian supply. We also had comments from ECB governing members overnight talking about potentially getting back to normal rates, to non-negative rates by the end of this year or the turn of this year. So we're seeing a sell-off take hold in European bonds, be it Germany, be it UK. 10-year yields for both of those down at least, at least 4 basis point. Price down, yield up. Now looking at Russian assets snapping 3 consecutive days of gains, we're looking at Russian stocks fall about 3%. It's not just sanctions, it's also really weak PMI data coming out of Russia showing a decline in services, the most since the pandemic. Meanwhile, a weaker ruble, stronger dollar throughout the session. And finally, Matt, we're also looking at 10-year bond yields in Russia up about 1 basis point.
I gotta say, I continue to be impressed by the ruble. I mean, 83, that was the same kind of level we were seeing before the invasion, so it's done a complete round trip, and it makes you wonder if European countries paying for Russian oil and nat gas aren't allowing the country or Gazprom to convert their euros into rubles at a rate that Putin has picked. It's very interesting indeed. The other really interesting thing that we've been following over the last couple of sessions is the yield curve inversion. We saw a slight 2s10s inversion on Friday that has then stuck around, but the term premium inversion is even more serious because it's the most that we've ever seen the term premium curve inverted. Mark Tinker joins us right now, Tosca Fund CIO, to talk about what this all means for the economy, what this all means for markets, most importantly. Mark, how do you view the inversion?
Good morning. Yes, well, I think historically the yield curve has given us signals, and a lot of people think it's the only thing that matters. But obviously, right now, there's a lot else going on. And really, this is all about what's going on with our basic price of commodities, which feeds into everything and feeds into inflation. So the big difference this time is every time we've had a crisis in the last 10, even 20 years, the Fed has cut interest rates. Now we've got a crisis and the Fed is raising interest rates. So it's throwing everything upside down. And at the moment, if you haven't got to buy bonds for regulatory or other reasons, why would you be doing it right now? And I think now you've got no carry trade, now you've got not got a real yield, I think there's a big flight from the bond markets, and that is causing a lot of volatility. And the volatility in the bond markets means other people still can't hold bond markets. So the whole thing has been thrown up in the air, and it's really, obviously, much more to do with Ukraine and the legacy of COVID as well. We shouldn't ignore that.
Among many things, this does feel like the great conundrum for asset allocation. That bond section isn't working as your insurance policy anymore. The yen certainly doesn't appear to be. So where do you turn to?
I think ultimately what we're seeing here has been this melt up, if you like, in equities, where people are saying, well, I need something that actually is making cash flow, paying a dividend, and basically is going to deliver me returns to meet my needs, rather than rely on somebody else to pay more for it in the future on a kind of speculative basis. So, yeah, we still got the growth themes, but I think it's the focus on cash flow and quality that people are saying, I can't have that bond. Give me some quality stocks, give me some cash flows, give me some boring stuff, please. I don't want volatility. I'm an investor, I'm not a trader.
Yeah, but Mark, how large is the threat to some of those companies that to this point have been able to exercise pricing power, but in the face of even higher inflation, greater costs faced by their end consumer, that price tolerance may be starting to dwindle a bit?
Yeah, you're right. I mean, this gets to the whole essence of have we got long-term sustainable inflation. What we have got here is a gap up in effectively input prices, and can you pass that on? Well, it depends what the competition is for your product, and also the prices that are rising at the moment. They're not going up because we had too much money circulating in the system due to the Fed. They're going up because actually we've got a lack of supply of the basic things. Now, what that means is that crowds out. So actually we could very well have this issue about stagflation, which basically means that having to spend so much more on heating and eating now, because obviously the impact of the Russia-Ukraine situation on foodstuffs and fertilizers, means that there's much less money to spend elsewhere. And governments aren't really helping. They're putting up taxes to pay for everything they did in the last 2 years, but they're also putting up interest rates. So in places where you've got floating rate mortgage debt, which we certainly have here in the UK and a lot of the Anglosphere, that's another crush on the ability to have any disposable income. So actually, I'm not buying into this sort of hyperinflation for everybody. I think it's going to be a big squeeze. If you're not an essential, you're going to really struggle, particularly if there's competition.
Yeah, it's interesting, Mark. I mean, coming from, in the U.S., most mortgages are going to be fixed 30-year mortgages, but obviously in Europe it's a different story, and that affects consumers. European consumers seem to be having the hardest time, right, with regards to inflation, with regards to heating bills, possibly pushing people into poverty with regards to floating rate mortgage payments. Is the European economy going to do much worse than the U.S. economy in the coming year?
Well, when it comes to the mortgage payments, just to pick on that one for a start, the continental European don't have the same mortgage issues that we do, say, in the UK or Ireland or Spain. And in fact, when we had previous tightening, you noticed there's a big difference between France and Germany and the Netherlands, for instance, where they didn't have that issue with the mortgage debt. But the big issue at the moment, of course, that we have is that we've pursued this policy, particularly with the green energy. The problem is you've got wind farms and solar panels. When the wind doesn't blow, and the sun doesn't shine, you have to back it up with gas. You can't back it up with nuclear. Now, we will be moving to have a lot more nuclear, which is, a medium-term trend. But right now, you've just got to buy the gas. You can't not do so. And this is the cost of living crisis. And it really isn't being helped by government policy, whether it's raising interest rates or whether it's actually continuing to raise taxes or even not take away some of those taxes that are supposed to be driving our green energy revolution. Now, take some of those subsidies away for 5 years. So, okay, we get it, but people are going to go that way anyway. So why don't we take off that 25% extra? But they're not doing that at the moment. Governments are very, very one-track minded, and that is going to really harm the consumers right across Europe, but for different reasons.
Mark, afraid that's all we have time for, but really great to have you on the program this morning. That's Mark Tinker, Tosca Fund CIO. Now, coming up with Matt, Kaylee, and me, it's Chatham House Associate Fellow and former UK Ambassador to Russia, Andrew Wood. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Crypto You have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
All eyes are on not just Russia and Ukraine, but all the rest of us in terms of how we're going to react. And there's a complex set of dynamics at play, certainly on the economic front.
That was Catherine Tai, U.S. Trade Representative, speaking with Bloomberg earlier. Well, for more on Russia and Ukraine, Sir Andrew Wood, Chatham House Associate Fellow of the Russia and Eurasia Program and former UK Ambassador to Russia, joins us now. Ambassador, great to speak with you. We've learned this morning that Ursula von der Leyen as well as Joseph Borrell will be heading to Kyiv later on this week to meet with Vladimir Zelensky in person. The European Union is under immense pressure to do something in reaction to the allegations of war crimes by Russians in cities like Bucha in Ukraine. What is an appropriate response, and what will Vladimir Putin respond to?
Second half of your question is more difficult. Well, in a way, it's easier to answer because I don't think he's going to respond to anything on this particular front, apart from saying, your accusations are all false and made up, and you've consistently lied, and you don't understand the situation, and so on. We're always familiar with the Russian reaction like that. The difficulty for the EU, or parts of the EU, is that the particular question of oil and gas for them is really quite a difficult one. It would cost them quite a lot in terms of punishment. If they did what a lot of people would wish them to do, which is to suspend the Nord Stream gas and so on.
Isn't it worth it, Ambassador? Isn't that worth it? I mean, especially after we see the atrocities committed in Ukraine, shouldn't they, isn't it their duty to stop funding Vladimir Putin's war?
Well, yes, certainly. That's what I think. But I'm not in the EU, and I'm not in control of the various parts of it anyway. But various parts of the EU have slightly different reactions to what's going on in Ukraine. Obviously, if you're Polish or Estonian, you have one sort of view of the situation. But if you're some other countries, you have more hesitation, I would say. Not right. Huge, but they've got to come to some sort of decision about it.
Right, and we've seen that hesitation from countries like Germany and Austria, but you see hesitation as well in terms of how far the West is willing to go. We heard from the UK yesterday, a spokesman saying that they don't want to be escalatory in this war. What is the limit to steps that the West can take without it becoming a World War III type scenario?
Well, I think by remaining on the without actually taking physical part, you may have an interesting discussion as to what physical part means, because after we and others are supplying military support in the terms of equipment and ammunition and so on, we're certainly offering support in terms of money, but what we don't do is ourselves take a direct part in fighting Russia.
Ambassador, if I can just jump in, I mean, I do wonder what second-order effects will be for countries, even if it's not a direct intervention. You look at Peru, that's dealing with inflation, civil unrest there are protests, there are curfews now. Sri Lanka dealing with a similar problem as well. To what degree do governments look at this around the world and say, okay, if we sanction Russia, we're going to face civil unrest as well?
Well, I imagine a lot of them do have that hesitation, because sanctioning in the sort of really strong sense that the United States and its allies have is one thing. But if you're in Peru, it's much easier to say to yourself, this is not something which is directly to do with us. And there are countries in Asia, for example, who don't really feel this is anything directly to do with them at all. So there's bound to be some hesitation.
what is the likelihood of a war crimes tribunal convicting Vladimir Putin, Ambassador?
Well, about as likely as him actually arriving in The Hague to face trial. I think that he is undoubtedly guilty and therefore vulnerable, but he's not going to leave Russia in order to expose himself to that. And in any case, they're going to use the United Nations and everything else to deny that there is an issue which they need to answer in any case. So it's all very preliminary. Plus, lastly, this is not a war which is going to end very soon, in my view anyway. I think it has a different phase to go through in a sort of battle for the east of Ukraine, which I hope the Ukrainians will win. But that has to happen before there's any real negotiation for a solution.
Ambassador, thank you so much for joining us today. That's Sir Andrew Wood, former UK ambassador to Russia. Well, coming up later today on The Balance of Power, we're going to be speaking to former U.S. Secretary of the Treasury, that's Jack Lew, 12 p.m. in New York, 5 p.m. in London. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
I will say this could be setting up for another leadership change at Twitter. You never know. And I'm not jumping to this conclusion automatically. I'm saying it's one of many possibilities. It'll either be Agrawal changing the policy of the company to, really open source the censorship or call people out on censorship, or it will be a management change. I don't know what's going to happen.
That was Cathie Wood, ARK Invest CEO and Twitter investor, speaking exclusively with Bloomberg's Carol Massar and Tim Stenovic yesterday. Now joining us now, Tom Keene, co-anchor of Bloomberg Surveillance. All right, Tom, give it to me. What's your single best chart?
Single best chart is the humility out there, the silence you hear from the bears. It is a really gloomy tone out there. You see in every confidence study, every single Kaylee idea, bull, bear, whatever. Everybody's a bear. Guess what? The VIX shows this is a great bull market. We are 4%, 5% under SPX and Dow drawdown. We are 8%, 9% under NASDAQ drawdown. We're getting right back, not near the average of pre-pandemic, but we're really getting back to levels that shocked the gloom crew.
You know, the interesting thing is they've just approved leveraged ETFs on the VIX again after Volmageddon got them canceled previously. What do you think about these kinds of, weapons of mass destruction in the forms of derivatives?
Here's what I think about it, Matt, very simply. Everybody has an ability and permission to lose money. Leverage is, we know, a triple-edged sword and all the cliches that are out there. There's a lot of really, really good math on this academically. And when you get over, here's the number, 1.38 to 1 leverage, it becomes sporting and grossly uncertain. So if you're leveraged 2 to 1, 3 to 1, 4 to 1, there's a huge amount of uncertainty out there unless you have the triple leveraged all cash fund.
And we know that you do, Tom. Tom Keene, co-anchor of Bloomberg Surveillance, thank you so much for joining us this morning. Now a look at what else we're watching. I am continuing to watch the winners and losers from the NCAA Men's Championship. Of course, the real winner was Kansas, but also we have a winner for the Bloomberg Brackets for a Cause Challenge. Of course, this is all for charity. It's a competition that pits a lot of the leaders in finance and business against each other. The winner this year, John Gray, the president of Blackstone. He has won because he had Kansas going all the way, and he indeed was right. He now collects $265,000 for his charity, the Vassar Center. So he fared a lot better in his bracket than I did in mine, Matt.
Wow, those are some big purse numbers there.
Yeah.
Very cool for charity, Kaylee. I'm watching crypto. You're watching crypto as well, not because of the moves that we see today or even of late. Bitcoin slow and steady rise, I think, impressing a lot of people, but because we have a pretty new program that airs every Tuesday at 1 p.m. Today we have Ken Rogoff. Tom will be jealous, a crypto skeptic, to talk to us about his views on the asset class, the markets, and regulation that's still needed.
Yeah, Matt, you'll be watching crypto. Kaylee will as well, but I'm kind of going to be literally watching crypto because I can actually watch a program because I'm not on it. So I, for one, will be tuning in. Well, besides that, I'm going to keep a close eye on JP Morgan, as well as any more banning potentially of Russian coal lines just crossing that the EU is proposing banning coal imports from Russia. That's after those alleged atrocities.
Like coal.
Well, yes,
I mean,
that is true, but
that's not a difficult sanction to apply. You know?
Yeah, but Matt, this is the thing. More people turning to coal, maybe not Russian coal, but coal in general.
Yeah,
if they can get
Germany
their hands
has
on that
more
Russian
coal
gas
than
supply.
they know what to do with already. I mean, they need to ban gas and oil. That's what's going to deliver Vladimir Putin like another $320 billion this year.
Yeah, I mean, to be fair, we have heard voices from the EU, Dombrovskis, Lemaire as well, saying that we do need bans on oil from Russia. But again, so far, it's just the EU proposing from coal. Well, we'll stay ahead of those market moves for you, but that's it for Early Edition. Bloomberg Surveillance is up next. This is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Investors want higher yields. They just don't like the path to get there. The jury will be out for kind of equities to be an inflation hedge or not.
The Fed may need to slow the economy down significantly to get inflation down.
These central banks don't want to be caught too far behind the Fed.
Getting a positive growth number for this quarter is really going to be a challenge.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene, and Bramo is back. Lisa Abramo is back in a seat. I'm Jonathan Farrow. Futures down 0.2% on the S&P. TK, the EU considering another step.
Well, they're considering a step, and it's a proposal. I get all that. We'll talk to Maria today in a moment. But what's interesting to me, John, is the series of steps in this proposal just released, but everything else as well. Coal, I get it. What's important to me is buried in Nardelli's article with Bloomberg is they may ban trucks and ships from Russia. To me, that's a bigger deal almost.
It's what we're not talking about, Tom. A proposal to ban coal, not a proposal to ban gas and crude. Isn't that the bottom line here? We're still not talking about that.
Yeah, yes, that's true. And we saw that in Hungary with that stunning election. We saw it in Austria with the statements yesterday. Latvia, I believe, as well, is heavily Russian affected on this. But, John, all in all, it is the beginning of micro steps towards really tightening things up for Mr. Putin.
Elisa, this is how we started the week. The conversation, how do you get a credible response from the Europeans to what took place over the weekend, the deeply distressing images we all witnessed?
When the only really measure they can take would be to cut off that some $300 billion of Vladimir Putin is getting in payments for their oil and gas every year, more than that. How much is that really going to be the juggernaut that could potentially turn the tide here? Because right now it seems like there is a feeling of urgency that isn't being matched in what Vladimir Putin is feeling in terms of pressure.
And ultimately facing a growth slowdown in Europe in a big way. We've got to talk about what's happening beneath the surface in markets. Home builders all year, really rough. Transports more recently, not looking pretty. Throw in the yield curve inversion as well. Reasons why some people, I stress some people, Lisa, are concerned about what's happening in markets.
And people point to transports in particular because this is a demand-side slowdown that people are starting to price in, that people are going to start demanding less as a result of some of the supply chain disruptions, as a result of some of the price increases. We haven't seen it yet, but everyone feels like it's coming. So at what point do we have to see that for people to change their view on just how much dynamism there is? In frankly, more so over in the Eurozone than in the U.S.
Lisa, welcome back.
Thank you.
It's good to have you back. Futures down 0.2
Oh, it's
on the
fantastic.
S&P. Bramo steps back in. Nasdaq futures down a little more than 0.1%. Yields higher by 5 or 6 basis points on a 10-year at 245. Crude at 103.63, up 1/3%. TK a little bit later this morning. A ton to talk about in the FX market, both the Aussie and the Japanese yen.
Yeah, it is a really, really interesting market right now. But, John, overwhelming all of this is the bull run in high tech and growth as well. The bears have just been humbled the last number of days.
Euro dollar, Lisa, just south of 110, 109.77.
I wonder how many times Tom says, the bears have just been humbled, and he looks over at me and says, have you? Have you been humbled? I've got to say, today, very much front and center is the European response to those atrocities that have been alleged against Russia in various places in Ukraine. Vladimir Zelensky of Ukraine speaking to the United Nations at 10 a.m. around there. Also, the European finance ministers are continuing to meet in Luxembourg. My question this morning was, why aren't oil prices even higher? Yes, they are higher, but we are far below some of the highs that we saw when people were concerned about sanctions expanding to Europe. Not seeming to be as much on the table, or perhaps the barrels that are coming on from some of the strategic reserves seem to be suppressing where things could go. Still remains a question as we look at tight supplies and still the demand picking up in a post-pandemic world. Today, we get Kansas City Fed President Esther George joining our own Michael McKee at 10 a.m. Other speakers throughout the day, Lael Brainerd, Neil Kashkari, John Williams, tons of Fed speak. My question is, how much are they going to take a look at a labor market and how tight it is and say, perhaps we haven't moved quickly enough? Yes, you are seeing real yields move closer to zero, but they're still negative. Why are they negative if we're looking at a restrictive policy potentially from the Federal Reserve? And at 10 a.m. we get U.S. March ISM services data. How much are we seeing this really fuel the drop in the unemployment rate, John? Because honestly, people are waiting for the services sector to pick up, even as you start to see potential weakness in the horizon for some of the more industrial sectors.
Hey, Lisa, thank you. Looking forward to the data through the week. And, of course, the Fed minutes coming up tomorrow. Ton of Fed speak in the mix as well. Our team coverage on Ukraine and the situation in Europe starts right now with Bloomberg's Anne-Marie Hordern in Washington, Maria Tadeo in Brussels. Maria, talk to me about the proposal, the reporting that we've just put out in the last 10 minutes.
Well, Jonathan, if you know how the European Union works, you know that once you put something on paper, you only do it because you're sure that it's going to go through. So the fact that there's now on paper a proposal to ban Russian coal from being imported into the European Union, to me, what it says is that tomorrow when European ambassadors meet here in Brussels, they will approve it. The other thing that to me is equally, if not more important, is also the fact that the European Union is now also considering shutting access to ports and shipping. A lot of this, of course, would have a big impact for the Russian industry and the moneymaker that it is for Vladimir Putin. The other thing I would point, of course, is that you could argue, yes, but it doesn't target oil, it doesn't target gas. But we knew that was going to be the case. This is going to be in crescendo. And the way the Europeans see this is first you go for coal, then you move into oil. This is a moneymaker. And then you move to gas, which Europeans see as really the big geopolitical weapon for Vladimir Putin.
Maria, coal production or usage, I should say, is down 40% in the last 10 years in Europe. There's a whole climate effort as well. Is this perceived as a short-term war in Ukraine gap and then on to climate, or is there a real chance of a step back, if you will, to use of coal across Europe?
If you ask me, is the second one for two reasons. One is that, of course, as climate transition costs money at a time in which bills in Europe, Tom, and I see it myself every month, are going up. Then the other big issue, of course, is that how can you talk about a climate transition, put a date on it, when we don't know when the war in Ukraine is going to end? When you look at the situation on the ground, we're nowhere near a ceasefire. When you look at what is happening with the Russian troops, are really trying to focus and conquer the east of Ukraine. That is seen by the Ukrainian authorities as a first step to separate the country and try to create something that looks like North and South Korea only in Ukraine. We're not going to see a quick ceasefire in Ukraine. This is a war that's going to last weeks, if not months. So to put an date or a date on the transition on the climate, I think it's very difficult at this point.
Meanwhile, from the U.S. side, Anne-Marie, we're seeing the U.S. Treasury Department try to tighten the screws on Russia. What is the goal of the latest measures with respect to Russian government funds?
Yeah, the U.S. Treasury is basically cutting off a carve-out they made for U.S. and overseas investors to be able to get paid in some of these dollar-denominated payments. Now what the Treasury is basically forcing Russia, forcing their hand, is to either draw down on the reserves that they have within their country, within Russia, to pay for these payments in new funds they're bringing in, like selling natural gas to Europe, or the third, which would be pretty terrible for Russia, which would be a default. So they're really forcing their hand into these three options, and this came as that Russia was due to make a payment. So the next few weeks is going to be incredibly challenging for the country.
Bramo, do you sense that this pressure is building around a story that I think is really starting to build over the last week, that the sanctions aren't working in the way that some people thought they would?
And certainly not quickly enough, right? So even if they are working or eventually will, the fact that we're seeing those images that were really startling and dramatic to a lot of people overnight, frankly, out of Bucha and other areas in Ukraine, really have raised the pressure on speed rather than just something that could eventually work.
Well, think about the debt payments as well, Lisa. I think there was a feeling a number of weeks ago they would default. Most people didn't think these payments would be made. I mean, Anne-Marie, do you sense that as well in Washington, that this is a conversation that's starting to grow a little bit more, that the sanctions aren't biting in the way they thought they would?
I think the U.S. administration has made clear that the sanctions would take a long time in terms of when you were going to see the hardest pain. But every day they talk about the fact that they have a tremendous amount of penalties on Russia. Russia right now is the most sanctioned country in the world. Look at Iran and North Korea. Russia is above that. At the same time that the United States and its partners are leveling sanctions against Russia, you have private companies pulling out. More than 400 private companies are saying we will no longer do business with Russia. But this isn't going to happen overnight in terms of potentially changing the calculus of President Putin. We also should note, though, that the U.S. said yesterday that Jake Sullivan, the National Security Advisor, in a briefing with reporters yesterday, talking about the tactical changes Russia wants to make, focusing on the East, really trying to make sure they have a stronghold in the Luhansk and Donetsk region, that eastern region, and also in the south near Crimea, especially making sure they have the water supply to Crimea. The issue then becomes, how long can this war last? He talked about a protracted war. That's months, that's years. We need to remind ourselves, President Putin has been in Russia, in Ukraine, since 2014. So it doesn't look like he's going anywhere.
AMH, thank you. Anne-Marie down in D.C., Maria Tadeo out of Brussels today. And this is the story, isn't it? The Europeans are still buying Russian gas, Russian oil. And the proposal that we've revealed in the last 10 minutes is a proposal to ban Russian coal and coal imports. TK, you're already seeing the effect worldwide, though, in many places. The protests over costs of fuel, fertilizer. Tom, did you see what's happening in Peru?
Yeah, they're all, yes, I did see that, and Peru's got its own really confusing political calculus. John, what this is about is the word controls. When do we see price controls? They're anathema in the United States, but they're highly typical. This is something Damian Sassower lives with in emerging markets, where you put in those controls to maintain political stability. That's going to be the tension rapidly.
And much bigger tension for the commodity importing countries as well. Lisa, the Peruvian capital, Lima, under curfew now.
Just the idea that this is what we're at right now, the idea that temporary food shortages are spurring protests. Peru is not necessarily an idiosyncratic story. This is what we heard about what might happen in northern Africa as a result of some of the wheat imports from Ukraine. People were talking about how this really led to the Arab Spring, the last time we saw this type of food inflation. How much are we going to be talking about this as a geopolitical concern heading into later this year?
We'll have that conversation with Tony DeSpirito of BlackRock a little bit later this morning. Good morning to you, with futures down 0.25% on the S&P. On the Nasdaq 100 down 0.25% also. Yields are higher by 5 basis points on a 10-year to 244.68, and crude is positive by about 0.6%. WTI this morning 103.90. From New York, heard on radio, seen on TV. For our audience worldwide, this is Bloomberg Surveillance.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Bloomberg's learned that the EU will propose a mandatory phase-out of Russian coal imports. That's a direct response to reports that Russian troops committed apparent war crimes in Ukraine. The European Commission is also expected to propose banning most Russian trucks and ships from entering the bloc. The U.S. Treasury is increasing pressure on Moscow to find alternative ways to pay bond investors. Authorities have halted dollar debt payments from Russian government accounts at U.S. banks. Russia now has three options: drain dollar reserves it holds in its own country, spending new revenue, or going into default. The U.S. Senate has set Ketanji Brown Jackson on a path for confirmation to the Supreme Court this week. Debate begins today on the nomination of the first black woman nominated to the High Court. Jackson's confirmation is all but certain now. Three Republicans say they'll vote in favor: Susan Collins, Lisa Murkowski, and Mitt Romney. In Shanghai, a sweeping lockdown of the city's 25 million residents and mass testing has uncovered extensive spread of the coronavirus. The city reported more than 13,000 daily COVID cases for the first time. China's current outbreak is surpassing a level not seen since February of 2020. And in sports, Kansas made history last night in New Orleans, beating North Carolina 72-69 for the NCAA Men's Basketball Championship. The Jayhawks rallied from a 16-point deficit. That's the largest ever in a title game. It's the fourth time Kansas has won the NCAA title. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Ukraine rages on.
President Putin's invasion is brutal.
Turn to Bloomberg for up-to-the-minute reporting from around the world and analysis of what it all means to you.
The intention here is to increase the pressure on the sanctions front.
I think the United States policy is that the sanctions continue until President Putin is no longer there.
For continuing coverage from Ukraine and around the world, keep it tuned to Bloomberg Television and Radio.
You may remember I got criticized for calling Putin a war criminal. Well, the truth of the matter, you saw what happened in Bucha. This warrants him, he is a war criminal. But we have to gather the information. We have to continue to provide Ukraine with the weapons they need to continue the fight.
The President of the United States on the deeply distressing images from the weekend. Futures this morning, good morning, down about 0.2% on the S&P, on the Nasdaq, down 0.2% also. Yields are higher by 5 basis points, 244.86 on a 10-year, Tom, and crude 104 on WTI. Just for a moment, up 0.7%.
Yeah, let's revisit. I saw this, John, out. Someone named Lisa Abramowitz put this out on Twitter. It was way too intelligent, John. The 10-year real yield, negative 0.36%. That's important. That is a lesser negative yield in the last 24 hours.
It's getting back towards zero, Bramo, slowly, slowly.
But why isn't it zero? I mean, if we're talking about a Fed that's going to be becoming restrictive, why is it still negative? I mean, honestly, that's my
Well, isn't that the Citi argument, Lisa? Isn't that the argument the Citi are making, Tom? That the plan isn't big enough and they're going to have to go harder than most people think. At least that's the view of Citigroup, Tom, and Andrew Hollenhorst.
My plan is to talk to someone who's an adult in the fixed income market with a definitive book, Steigum's 1,200 pages in his own work as well. Anthony Cosenzi joins us for Global Wall Street's brief this morning. Buried, Tony, in your note is the heart of the matter, and that yield is made up of a subset of, Fabozzi would say, 3 or 4 key things. What's happening here is what's not happening. You're looking at expected inflation and term premium, and they're not moving, are they?
No. So as you said, there's 3 components. It's where do you think the Fed will put the policy rate relative to the inflation rate? That's the first component. You simply add these things in the back of an envelope. Secondly, what do you think the inflation rate will be?
Excuse me, I got to interrupt. Anthony, we do not do them on the back of an envelope. We use the Bloomberg terminal. Now continue.
Or as a piece of paper. True. We do. The Bloomberg terminal, of course. My go-to. It's like the movie Wall Street. Wake up and turn it on right away. You might remember that with Bud Fox, the character there. All right, so we've got 3 components. It's the where's the Fed put the policy rate relative to the inflation rate? Secondly, what is the inflation rate? Third, how much extra yield does a long-term investor want for going out on the yield curve? And you see the term premium is negative, meaning looking across the curve, a very flat curve. Why call it a curve? It's more like a yield line. Investors aren't asking for much for stepping out on the yield curve. On inflation expectations, you can't use tips to gauge that. You can to some extent, but the problem is it averages in the year ahead, the next 2 years ahead in that 10-year horizon, and there's a distortion. So the best way to look at it, the Fed does this, is look at the so-called 5-year. Where does the market think the inflation rate will be in 5 years, looking 5 years out, the same 10-year horizon, but it steps above the noise from oil, food prices, et cetera. That's only around 230. So we've got a term premium, according to the Fed's math, of minus 40. But let's use 0 for what that should be, or something higher. Let's use 2.5 for the inflation rate. So we've got 2.5% fair value. But then the big question is, where should the Fed put the policy rate relative to the inflation rate, historically above the inflation rate? And if we presume 2.5-ish is where the inflation rate will be, we could probably say then it's something like 0 to plus 0.5. And so the 10-year is close to where it probably should be, but not there.
Well,
and so PIMCO is underweight duration in part because of this, because there isn't enough term premium in that yield. There isn't enough yield
Tony,
to
hold on a
compensate
second.
for the risk of higher inflation.
As you're speaking, I'm trying to do the math on the back of a
it was so
Bloomberg
hard.
terminal or something.
We had 3 components.
But, okay, but hold on a second here, because
myself.
if we're about a 0.5 percentage point potentially from there, and you think it's about 2.5%, that is the terminal place of inflation in this particular cycle. If you're looking at a 3% overnight rate by the Federal Reserve, how could the 10-year yield be slightly lower than where it should be? Why isn't it something closer to 3% at this point?
Well, to some extent, the so-called yield curve is a sloppy patchwork of random expectations now and some technical distortions. Look at the 2-year 245, and then the 5 years about 260, call it 260, and then the 10 years 245, and the 20s and 30s look different. Then looking in the forward rate space, so to speak, there are lots of different views. So it was a rapid change in views, expectations, and so there are these distortions. But Lisa, as you say, why shouldn't then the 10-year yield be higher if the Fed's going to put the policy rate higher? Let's think back to 1994, the last dramatic period of Fed rate moves that was aimed at shooting down inflation fears. The ISM price index back then got to as high as it was last month in the mid-80s or so. There were lots of fears about inflation. The memories of the 70s and early 80s inflation was still fresh, just like the feelings about the global financial crisis to us are still fresh. And so the Fed had to battle. But it did something odd then. It started slowly, 325s in terms of 25 basis point moves, 250s, and then 175 basis point move. This ignited a bond rally, oddly, and then yields kept falling. This will be what I would call the Costanza, George Costanza Fed. It'll do the opposite. George Costanza from Seinfeld, in one famous episode, he did the opposite of what he always did to find success. So the playbook then for this year and next is to do the opposite of 1994, not move slowly, but move rapidly to keep inflation expectations down. So at least I'd say that the answer to why the yield isn't even higher, there's a feeling now that's built up over 40 years that the Fed will ultimately be successful in knocking the inflation rate down so that any move in the policy rate will be short-lived, and that's what the forward rate curve suggests. And on Bloomberg, Tom, that's FWCM.
We appreciate the clinic. Tony, thank you. As always, Tony Crescenti there of PIMCO. Thank you very much. Credit Suisse out with a call, Lisa. They think the 10-year north of 2.8%. I have to say, we're not far away, are we? 246 on 10s this morning.
No, that would have seemed like a really bold call perhaps 6 months ago. Now it seems somewhat realistic. And they're talking about quantitative easing, how much that's going to contribute to a rise in longer-term yields that people aren't considering. I don't hear people really trying to analyze the effect of quantitative tightening, even though we seem to be moving towards some kind of announcement on that front.
Fed minutes tomorrow. Chairman Powell told us to look at them. We will do just that. How excited are you about Fed minutes tomorrow, Bremo?
Oh, I'm excited. I mean, I'm actually excited to see whether Tom will read them or even pick them up. But
TK, will you read the minutes tomorrow?
They'll be interesting. Why?
No, why not?
They're dated, they're old, they're boring, and I just don't do the parlor game. What I would say is some of us, or perhaps several of us, care about the minutes.
When you say you don't do the parlor game, what does that mean, Tom?
The parlor game is the modern media addiction of gaming legitimate Bloomberg data and micro-analyzing it tick by tick. I look at the raw economic data, economic growth. Granted, some of those numbers are slowing down. There's no question.
I just Googled parlor game. It's to take a glass of Tang, sit there, and to say, nah, I don't have an opinion.
Tom just dumping on the whole research industry on Wall Street this morning.
Several of my glasses of Tang have been less than ice cold.
You've had more than several.
Some.
The majority of the committee. One man had all their drinks.
How about Arsenal? Derby.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Live from New York City this morning. Good morning on TV and radio, with equity futures just a little bit softer by 0.25% on the S&P, and the Nasdaq 100 down 1/3%. JP Morgan out just yesterday with a constructive note, as you might expect from Marko Kolanovic and the team, saying that we may be near the end of Fed repricing. Credit Suisse, they disagree. They say we're underestimating the power of QT. So switch up the board and get to the bond market. 2s, 10s and 30s. 10s at 246.53. Credit Suisse CS going through 280. 2s right now, 247.32. There's your inversion right there. Just a little bit. The difference between the two, negative about a basis point or so. Let's finish on foreign exchange together, Tom. We'll work through this one. Two currency pairs, the Aussie and dollar yen as well. Dollar yen, the first crack, I think, for Governor Kuroda in a big way, referencing the somewhat rapid move in the Japanese yen. That's putting a lid on things just a little bit, just south of 123 at 122.93. And the Aussie, Tom, outperforming. The Aussie, as Governor Lowe drops a pledge to remain patient. The Aussie, the RBA, Tom.
Right.
I think they're about to do something because the data says, let's go.
Very quickly, John, because we've got an important guest. Euro Swissy shows me strong Swissy this morning. It bears careful watching by global at Wall Street. Not all safe havens are moving, but Swissy is moving, not to recent strength. But there it is. John Blanchflower out with a tweet. It looks like page 212, a wage curve. He's got enough data in here to make your eyes glaze over. Classic. What is he, a professor or what?
Do you want to run a
Blanchflower, there's too many numbers this early in the morning. Look at the bottom, John. He's got the numbers here on fear of unemployment. He says why the ECB will not raise rates.
And Tom, let's be clear. You mentioned the Swiss franc. The SNB, the last thing the SNB needs is what Danny Blanchflower is describing the risk of, which is a recession in Europe.
Yeah, well, there it is, and that's the churn, the turmoil right now. Analyzing that as always, Frances Donald, Global Chief Economist, Manulife Investment. We're thrilled that she could join us this morning. Frances, I love what you say about Jerome Powell. He's going to be boxed in, and to distill your really good paragraphs, you're looking for a steep downturn in manufacturing. Expand on that.
Every leading indicator we have of PMIs tells us they're heading lower. Frankly, every leading indicator we have of the economy tells us that it's heading sharply lower in the next 6 months. And that means, as you said earlier, that a lot of the information we have, like Fed minutes or how data was in January or February or March, is really looking stale to me. When I look forward over what the Fed is facing in the next 6 to 9 months, they're going to have still high inflation, but their mandate focus is going to have to shift back towards the employment side of the picture as growth really softens. And that's why if you're marking to market, sure, Fed looks like it could go 8-9 times this year. If you're looking forward into what the Fed will be facing, much more difficult to see how they're going to be able to hike either as much as they want to or the market has priced it.
The anti-Holland horse, do they come out and say one and done if they go 50 beeps, or do they play it out, say, into the summer and then go enough?
That pivot probably happens closer to the end of Q2 or Q3 because they're going to need cover to do it. You can't make a 180 until the data has changed. I think they may start focusing on how the nature of inflation has shifted. We're moving from COVID inflation to conflict inflation. That's a really important inflection point. It's a different composition of inflation. In my view, it's much more damaging to growth than COVID inflation. Hey, if you didn't want to rent a new kitchen or build a pool or buy a used car, well, you just went without. With conflict inflation, we're going to see a lot more demand destruction, even as headline inflation declines. The Fed is going to have to face that full on.
Francis, have we clarified the reaction function of this Fed? Given the opportunity, given the decision, a toxic one at that, to curtail inflation or save the economy from recession, which one would they choose?
Well, Powell has suggested that he's more in the Volcker camp than save growth camp. I think it's really interesting that we've moved from, oh, it's going to be the roaring 20s and it's a reflation trade for years, to most shops debating whether it's a technical recession or just a growth slowdown in a period of time. It does appear as if the central bank is willing to sacrifice growth. That's how monetary policy effectively works. And this market telling us it's pricing in cuts over the next few years already suggests that the reaction function the Fed has so far told us is that, yeah, it's willing to sacrifice growth in order to calm inflation. I think that makes sense now when inflation is really high and growth feels like it's overheating. It's not going to feel like it makes as much sense in 3 to 6 months.
Francis, JP Morgan taking some comfort in the upcoming mechanical peak in inflation. That term mechanical peak, Francis, can you run us through when the base effects start to kick in the other way and when you'd suggest a mechanical peak in inflation would develop?
Oh, it's around March or April. But again, I really did take a lot of comfort in that mechanical peak. I've been in the transitory camp, even though it kind of became bad to say that, because COVID inflation was always going to be transitory. But we really have to move away from the mechanical peaks in inflation towards the compositional nature. We've been complacent about the damaging impacts of inflation on growth because where inflation was coming from was not necessary goods. But this conflict inflation is going to create a much bigger drag on growth, even if it's a lower number. And that's why the Fed is going to have this covered for a pivot later this year. Inflation will look a little bit better on the surface. We're all going to feel it a little bit more in our day-to-day lives.
Francis, I'm trying to game out 4 to 6 months from now, and you think that we're going to start to see the Fed shift stances back to something that seems more concerned about the labor market than simply inflation. How high do you expect the inflation rate to be if we do get those base effects the other way?
Well, I'll give you an example. Prior to Russia's invasion of Ukraine, we had inflation ending at the bottom end of the 2% range at the end of this year. Now it's closer to the 4 to 5% range. But when we do this painful exercise of looking out 5 years, when we get to 2023 and beyond, our inflation forecast is back to 2%. On March 16th, Chair Powell was asked, how much of this year's inflation do you expect to come down because of your rate hikes? He said the most important thing he said in months, well, we actually can't combat this year's inflation. We're trying to target the next few years. The next few years are not the problem for inflation. Inflation is a problem in 2022, and there's very little the Fed can do about it.
Francis, the reason why transitory became a dirty word is because the Fed got it wrong. The Fed got inflation wrong on many levels in terms of what their policy was. This is the accusation in a lot of academic and, frankly, market circles. Where does the credibility come from for the Federal Reserve for them to make that pivot at a time when inflation is still 4 to 5%?
Well, what a challenge, right? And all central banks understand that they could hike rates as much as they want. It's not going to bring down energy prices. And that's why paying attention to long-term inflation expectations is so key, because central banks will continue to try to convince us that they have some control over that. But Lisa, this brings to question a longer-term issue that I think central banks are going to have to face, which is the inflation of the next 10 years looks different than the inflation of the past 10 years. It's going to be focused on deglobalization and ESG trends, much more supply side, much more global than the inflation we've seen, frankly, over the past several decades. So there is going to come into question how much control do central banks have on
future inflation, post-COVID inflation than they did before. Let's hope they can control that long end of the inflation curve. So far, we're still seeing the break-evens inverted. That's good news. But I suspect we're going to hear a lot more comments about their extending mandate. That wouldn't surprise me.
So, Francis, let's put the other hat on. What's the big market call?
We are moving more defensively. So I tweeted yesterday, recession or no recession in your outlook, growth is going to slow pretty significantly. And that means moving more defensively as we head into that growth slowdown. I do not believe it is entirely priced right now. And I think, sure, we could see some upside in yields, especially as we see ongoing hawkishness from the Fed. When you look at that 40-year downtrend in that 10-year yield, I'm a believer we can't yet break out of it. That means we're probably near the peak in this rates move.
There we go. Francis Donald of Manulife Investment Management with a big call right at the end there. Francis, thank you very much. We could be very close to a peak in the long end, Tom. Right now, 10's 247.
Oh, that's the opinion out there. I don't know, John. What I love is that we got a huge debate going on at Bloomberg Surveillance. I mean, that's all there is to it.
Well, in a massive way. I think the line that jumps out at me from that whole interview, Lisa, we've been complacent on the damaging effect of inflation on growth.
And frankly, this is what the Fed is contending with. They want to be patient, and yet credibility is kind of passing them by as people take a look at their balance sheets. What Francis is saying, though, there is a distinction between the pandemic-era inflation and the crisis-era inflation, the conflict-driven inflation that actually is more damaging to growth. How do they parse that out after the months and years, frankly, of saying it was transitory, only to see it not borne out?
I keep going back to this question in a lot of interviews and conversations we're having on the show at the moment, trying to get to the back half of this year. If growth does decelerate materially, have we fully clarified the reaction function of the Federal Reserve? If they face a growth slowdown, but inflation is still high and well above target, what do they choose to curtail? Do they choose to curtail inflation, or, Tom, do they choose to support growth? That's going to be a real test for this Federal Reserve, if indeed the data develops that way towards the back end of this year.
I would point out into an election as well. But, of course, the Fed is not political, so...
Well, Tom, typically they've avoided those kind of scenarios, haven't they? It's going to be tough. And you mentioned the electorate too, Tom.
Under any scenario here, it's going to be tough. And as Ms. Donald said, when it's tough, what do? You wait for the data. Every central bank, this is Timberlake, Meltzer, Schwartz 101, Bernanke 101, they're ex post, they wait for the data. That's what they're going to do.
I would suggest, Tom, if this Fed's got to move away, take a step back because growth and the picture around growth is not good, that's probably not a good reason to step back. Lisa, I'd also suggest, Tom, introduce the political question too. That's a tough environment in the back end of this year.
What I'm curious about is, does then the yield curve steepen, right? Do people start to get concerned that the Fed is losing credibility in terms of controlling inflation over the longer term? Or can they convince markets that they do have a handle on it, that they do have faith that this is going to roll over?
John, we got a problem. Can we stop the show?
Go on.
This is a problem, and I'm embarrassed as a major TOTS supporter, and I love what Conte's doing and all that. They've been watching the show. I talked to Mr. Levy, and they stole it from Bramo. They now have the Conte cam.
I like this a lot.
It's not the brand. It's a Conte cam.
Tom, isn't he box office?
Conte cam. Look at this.
He's just absolute box office.
I mean, Qantas. We need the artwork on that for the Bramo cam. I mean, we need that.
If we had a Bramo cam, can you imagine the sponsorship, TK?
It would be huge. The opportunities. Hermes would step in. I think Vivian Westwood would probably go for that.
Do I have to do that little?
What we do, not only it depends who the guest is.
Come on, Lisa, you got to do this.
Depends who the guest is. I'd like to get Marko Kalanovic on the show.
All right.
Get the team at JP Morgan on, talk about why they're bullish equities, and then get the Bramo cam, and it wouldn't look like Antonio Conte after Spurs have just scored a goal. Maybe when Nuriel's on, we get something a la Antonio Conte.
You know, but yeah, sure.
Futures.
Down about
Derby,
a third.
Arsenal.
May 12th, Tom.
Tots,
Thursday
me and John,
night.
destined.
You really want to make that happen, don't you?
Yeah.
From New York.
Destined.
This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Ukraine's President Volodymyr Zelensky will address the United Nations Security Council today. The speech is scheduled to begin at 10 a.m. New York time. In his nightly video address Monday, Zelensky referred to the killings of civilians by Russian troops and said the death toll may be even higher. The black boxes from that China Eastern Boeing 737 crash have now been sent to the U.S. The two flight recorders have become central to solving the mystery of why the jet entered a sudden nosedive before crashing. Any evidence that clears or implicates Boeing could be critical for the company in China. Twitter's largest shareholder says he will be a passive investor, but in the hours after Elon Musk announced he'd taken a 9.2% stake in the company, some were skeptical, and ARK Invest founder Kathy Wood says Musk's investment may lead to another management change.
I will say this could be setting up for another leadership change at Twitter. You never know. And I'm not jumping to this conclusion automatically. I'm saying it's one of many possibilities. It'll either be Agarwal changing the policy of the company to, really open source the censorship or call people out on censorship. Or it will be a management change. I don't know what's going to happen.
Twitter CEO Parag Agrawal replaced founder Jack Dorsey in November. Global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
That over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I would focus really on the kinds of changes that we're trying to bring, which are really not about stopping trade or trade divorce. They're really about bringing reform and a more strategic approach to trade.
Really interesting person to listen to if you get the chance. That's Catherine Tai there, the US Trade Representative. From New York City this morning, good morning to you. Futures are negative by 1/3 of 1% on the S&P, on the Nasdaq too, down by about 1/3 of 1% also. Yields are much higher by 7 basis points on a 10-year to 246.89. In the mix as well, crude positive by more than 1 percentage point, 104.48, so $104.48. Tom, this line came from TUI, a travel operator in Europe, which I'm sure you know well. They see summer 2022 bookings to return close to summer 2019. There's a headline for you. They're going to hire 1,500 new staff, more than that. So there's a big one, Tom. Summer 22 bookings for them, at least, to return close to summer 2019.
John, count it yesterday. 1, 2, 3, 4, 5 people I ran into in the span of my immense Monday complained about the price of airfares.
Me included. You and I had that conversation on the phone, Tom. Those numbers are just...
We don't need to bore people. You've all got your own
they're all
numbers
living
on radio and TV. We're all living it. But here we are, very 2019. In 2019, he was less known. His commitment to sending the medical message to media is maybe best in class. Good morning, Peter Hotez, down at Baylor as well. Amish Adalja joins us now, senior scholar at Johns Hopkins, who has really tried to be smart when other people are panicking. Amish, I want to talk about a word that's in the medical textbooks we don't hear enough about, and that is this strange word, virulence. Do we have any idea of the virulence of the new thing versus Omicron and Delta?
I do think we have some idea of what virulence levels this new variant or BA2 has. So virulence means how much disease a virus or a pathogen can cause. And what we've seen, and remember BA2, even though we think it's something new or call it something new, it's still another version of Omicron. It seems to be less virulent than Delta. It seems to be less virulent than other forms of this virus, and that may be because some of the mutations that it has have affected its ability to cause disease. That doesn't mean it doesn't cause disease. We certainly have had people die and be hospitalized, but it's less likely to do that on a pound-for-pound basis versus something like Delta, for example, and it's especially less likely to do that if you've been fully vaccinated.
Away from people with serious medical issues, diabetes and others, maybe obesity, etc., when you look at healthy people, is there something to fear here, or is it if you're well, go to work, if you're not well, stay home?
I think that's right. I think if you're somebody that's fully vaccinated and you don't have any high-risk conditions, you're not immunocompromised, infection with COVID-19, any of the variants is going to be more of a nuisance to you because you've been vaccinated. Now you've shifted the disease spectrum to the mild side. It's going to be like some of the common colds that you get. You don't want to infect other people. So if you're sick, you need to stay home so that from work or from wherever you may be going until you're not contagious. But it is going to be something that's increasingly manageable and not as disruptive as it once was.
When do we stop testing, Dr. Adalja?
I think that's really going to be organization specific. Many organizations are very allergic to having any cases of COVID-19, even mild cases in a fully vaccinated population in their organization. So they continue to do that. But in general, if you're symptomatic, I think you should be tested because you might qualify for antivirals or monoclonal antibodies. But I think asymptomatic screening of employees, asymptomatic screening of students at college campuses, cruise ships, all of that has to go away eventually as we manage this more like influenza and other respiratory viruses, and then really reserve testing for symptomatic individuals. But it's taking a long time for a lot of these corporate risk people to acclimatize to this new environment where COVID-19 is going to be a risk. And remember, people do things outside of their workplace, outside of their school, that is a higher risk than actually being in the school or wherever the organization is that testing is going on.
Amish, I felt like you were quite clearly referencing China. It depends on your tolerance. If you're China, you're going to keep testing until you're blue in the face because everybody's got to not have COVID, and you're going to follow the zero COVID policy. However, are you starting to see signs that they're relaxing it in a new way? Is there a new way to look at what COVID zero means in China?
Not particularly. I think you see some changes in the rhetoric, but there was just an article in the New York Times yesterday about child separations occurring in Shanghai, where if a parent tests positive, they remove that parent from their child or vice versa, and they isolate them separately. So there still is this proclivity to use draconian measures for something that's not sustainable. And I don't know if they're going to pivot from it because they've invested so much into it, but it's not sustainable. It's actually damaging those individuals there because they have no idea how to risk calculate. It left the population very vulnerable, and they didn't actually do the task that they needed to do, which was vaccinate their high-risk population. So on almost every grade, you'd have to give them a failing grade for what they did. And they really squandered the time that they actually did COVID-0 because there was not enough vaccine put into people, and they didn't vaccinate with the correct vaccine. It's a less effective vaccine, and they badmouthed the mRNA vaccines.
Doctor, where do you see it going in China?
I don't know. I don't know how long they can handle this as a COVID-0 type of policy. We're reading about some pushback in Shanghai. I think that's good. Hopefully the population starts to ask for more rational, targeted, precision-guided measures that reflect the fact that we have vaccines, that they're available, that we have antivirals, that we have monoclonal antibodies, and treating every activity as if it's the same risk. It doesn't make sense, and having people quarantine and isolate at whatever point they are, wherever they are, if they're at their office, instead of letting them go home, makes no sense. New Zealand has thankfully abandoned COVID-0, and they're doing well, even though they've got cases. Their deaths are low because they vaccinated. So hopefully they see the example of New Zealand, but I don't know because they've got so much politics invested in this and so much promotion of the COVID-0 strategy that it may be hard for them to move from it.
Doctor, thank you. As always, Emea Index there of the Johns Hopkins Center for Health Security. I'm sure many of you saw the headline from overnight, record cases in Shanghai, and then you look at the number. And the number, a record COVID case from Monday in Shanghai, is 13,354. Tom Keene, for a city that runs in the tens of millions. That's the story. But still, it's only 13,354.
I would not play medical professional, but I would advise John to bronze what Dr. Adelja just said. And to me, the tragedy here is they simply will not accept Pfizer and Moderna's science as a solution, not for all of China, but for a good part of it. I mean, that's all this comes down to.
Which is why we asked the question, Lisa, where's this going in China?
Yeah. And it's not just us asking. I mean, think about the companies. At what point do we start to see some of the deglobalization or the removal of certain factories or shipping services out of China to other Asian nations or other locations closer to home? I mean, this is increasingly going to be the conversation as we stretch into the third year.
I defer to Tom on this. Tom, you've been out front on all of that. The companies, the banks are leaving Hong Kong, and you've talked about Singapore. And it's slowly happening. Not the banks leaving, but the teams are getting sent out, just under the radar a bit.
Under the radar, and it's delicate, and I will state this as clear as I can, John. When you come out of Hong Kong, you go south to Singapore, and you're on the plane, and you're like, we're there soon. Why are we having a meal? And then you realize how far away it is. The geography here, John, is the key point.
The conversation continues on the equity market with Tony DeSpirito of BlackRock. We'll catch up with him very shortly. Your equity market is down about 0.25% on the S&P this Tuesday morning. Good morning to you all. Yields are higher by 7 or 8 basis points to 247 on a 10-year, and crude is up by 1.4% to $104 and around about 70 cents. From New York City on TV and radio, this is Bloomberg.
That it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Investors want higher yields. They just don't like the path to get there. The jury will be out for kind of equities to be an inflation hedge or not.
The Fed may need to slow the economy down significantly to get inflation down.
These central banks don't want to be caught too far behind the Fed.
Getting a positive growth number for this quarter is really going to be a challenge.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures are negative 0.2% on the S&P. TK, the pressure piling up on the Europeans.
It is real. The headline series, folks, on the Bloomberg, there are these amber headlines, and the set of grim headlines, John, is something. And I'm going to dissolve, as we did in the last hour, to David Blanchflower, the acclaimed economist of Dartmouth, who says, look, the ECB is not going to raise rates. Dovetail that, John, with the big tech move in America, where big tech growth is moving, because perhaps there's a bet they won't raise rates as much. It's all one into this true grimness in Europe.
Because growth is decelerating, expected to decelerate through the end of this year, Tom. The energy crisis, and I think we can call that in many parts of the world, threatens to hurt growth even more. And the Europeans, for that reason, are worried about taking sanctions too far. Now, Tom, the question I have, the proposal this morning is on banning coal imports. I know it's a little cliche, but is there a red line for the Europeans that the Russians could cross where buying Russian gas and Russian oil just becomes too much? And Tom, if we're not there yet already, I don't know when we'd get there.
The papers are doing the best they can to pretend it's 1950 and we don't show people these horrific images. And of course, the Russians say it's alleged, et cetera, et cetera. John, the Twitter feed is the modern newspaper, and those images are appalling. Whether they're alleged or not alleged doesn't matter. They're being overcome by events. OBE, that's what's going on.
Lisa, deeply, deeply distressing.
Deeply distressing, which is the reason why you are hearing harsher rhetoric, and some people are saying perhaps oil and gas are on the table. But to your point, is there a red line? Is that what the market is telling us? They don't believe that Europe will actually go through with harsher oil and gas sanctions, because you're not seeing much of a move in the crude prices. And really, I don't understand why that would be, considering some of the hysteria in markets earlier, just days ago, when we were talking about that potential.
Do you take the fact that they're talking about at least the energy sector as a sign that there's not much left now?
Honestly,
And outside of coal, what is left?
Javier Blas of Bloomberg Opinion seemed to suggest that out on Twitter. Basically, they are crossing into energy as not being taboo. How much does that become the conversation? And yet, how much of a pound of flesh do they have to take from their own economic trajectory in order to enact those oil and gas sanctions?
Good to have you back, Bramo.
Thanks.
As always. Futures down about 0.2 on the S&P, on the Nasdaq 100, down about 0.25%. Yields are much higher this morning. In fact, the curve is steeper. 2s10s is back in positive territory by half a basis point. Your 10-year up 7 basis points to 246.89. Your 2-year just short of that, up 4 or 5 basis points on the day. Crude Lisa high up by $1.33, up by 1.3% at 104.65.
Yeah, but to the point earlier, why are oil prices not even higher, given some of the mounting pressure to do more in light of some of the images that were just horrifying that we all saw over the weekend? Today, we do hear more on that point, on what the rest of the world can do. Vladimir Zelensky of Ukraine will be addressing the United Nations at 10 a.m. Also, we have European finance ministers continuing to meet in Luxembourg. This is a 2-day meeting. Do they talk about that? Do they talk about the potential for oil and gas sanctions? Do we hear more about what Germany and the rest of Europe is doing to divert away from simply relying on Russia? We did hear something and are expected to hear more from the United Kingdom on that front today. Also today, Kansas City Fed President Esther George is joining Bloomberg Television, our own Michael McKee, at about 10 a.m. Other Fed speakers throughout the day, lots of them, Lael Brainerd, Neil Kashkari, and John Williams of the New York Fed. Do they discuss this concern that people have that perhaps the Fed is getting behind the curve? Yes, you are seeing real yields rising. They're lesser negative, as we were talking about earlier, Tom, and perhaps the least negative going back quite a long ways. However, at the same time, they still are negative. We're still talking about negative yields at a time when we have potentially restrictive Fed policy. And at 10 a.m., we get U.S. March ISM services data. How much do we see that really making up for some of the slowdown that we're talking about in industrials, as we do see the unemployment rate fall to the lowest since before the pandemic, John?
That was
10 basis
brilliant.
points
That
away.
was brilliant, John.
10 basis points away, Lisa.
John, we are so far away from potentially restrictive. We are miles away from a restrictive policy.
Tom, isn't that the city argument?
Yes, I'll go with it. I'm just saying we're living in a fictional time of multiple years, and look at the Taylor rule. You can get the Taylor rule, folks, on the Bloomberg. We're not going to show it now because Anne-Marie and Marie are more important. John, the Taylor rule gap is something no one's ever theorized. We're so off the mark.
But Tom, you don't like the parlor game, but you've just laid out the Citigroup argument. We're ages away from curtailing demand.
I have sat in John Taylor's parlor in Palo Alto, and I can tell you that it's very elegant, and the Taylor rule dominates.
That's
ultimately. He loves
I know he does.
Yeah.
Tom, thank you. Team coverage.
He
Starts
serves
right now.
pie.
Take a beat.
It's a joke. He
And
serves
Marie,
pie.
down in
Get it?
DC.
Pie,
Maria
equation.
in Brussels.
Pie.
The two of them can't wait. Maria Tadeo, let's start right here and get real about sanctions. A proposal to do something about coal. Can you start there?
Yeah, and Jonathan, when you get something on paper in the European Union, that's because it will get approved. Otherwise, you don't put it on paper. That is a golden rule in Brussels. Otherwise, you debate around it behind the scenes, but you don't write it down. So the fact that now we have something on paper, to me, what it says is that tomorrow this will be approved. And again, you also have details here, which in my view, they're equally important, which is there's big restrictions coming in for Russian shipping and ports coming into Europe. So a lot of this will take an impact on the Russian industry. The other thing, of course, is that you could say, well, we're disappointed. There's no gas, there's no oil, but we always knew this was going to be in crescendo. First is coal, then you move to oil, and finally you get to gas. That's a big geopolitical weapon. And ultimately, that will be a decision for the German industry to make.
Those images are there, Anne-Marie. What will the President of the United States do today about the images on Twitter and in the papers and on television?
Well, we heard from the president yesterday. He reiterated once again that he believes Vladimir Putin is a war crime. He said, war criminal. He said this guy is brutal. Everyone has seen what is going on in Bucha and is outrageous. And then we got a briefing from his national security advisor, Jake Sullivan, which said that what is going on in Bucha and across Ukraine, they are atrocities. This is war crimes. What they are outlining now is what are going to be the penalties for these images that we are all witnessing across our television screens, across social media. And Jake Sullivan said that we will get new sanctions this week, and there are discussions between the United States and Europe. And he said energy is part of that discussion. And already what we're seeing is potentially a window to that, hitting the Russian fossil fuel sector, the first step hitting it with these potential coal bans.
Maria, from your perspective, do you hear enough about what Germany in particular is doing to fortify its energy streams ahead of potential sanctions like that?
Look, I know that yesterday, of course, they talked about nationalizing the Russian arm of Gazprom in Germany. It's called, of course, as you know, Gazprom Germania. They talked about that. They also talk about all the trips that they make around the world to try to get another energy supply. But of course, I would point to the words of the German finance minister, Christian Lindner, who says, in the eyes of the German government, we have to work with smart sanctions. If this hurts more the German economy than it does with Russia, well, that is a problem for us. But ultimately, a lot of this is a power struggle between the German political class and the German industry. The German industry, we heard from the CEO of Deutsche Bank, this will send us into a recession. But at one point, the psyche of the nation, you can already see it on the press. When you look at Bild, this is the most news-read paper in the world. They talk about a massacre in Bucha, and they say, when is the chancellor going to wake up to this and finally enact what Germany says is their tagline, never again after the Second World War? So a lot of this, of course, is the economic tension, but also the politics of this.
Maria, is this still an economic question, or is it now a moral one?
That is really the point. When you look at Germany, for them, there is still a big economic issue here. They really talk about, well, what if we go into a recession, but Russia continues to operate as semi-normal? It's a guarantee that if we ban gas, the war is going to come to an end. Others will tell you perhaps it won't, because the question about Ukraine, and there's many theories around this here, is whether you believe that this is just a military operational, that this is just strategic, or actually you believe, like many Ukrainians do, that this is existential, that Russia and Ukraine cannot coexist in their current forms. At that point, if you're a German industry or a German CEO, well, you don't see a clear end to a war, even if you ban gas. So a lot of this is the economics, but also the politics of it.
Maria, thank you. Maria Tadao, Anne-Marie Hordern on the latest from DC and Brussels, respectively. And based on the reporting of Alberto Nardelli here at Bloomberg and the team, this wouldn't even be a ban on Russian coal. It would be a mandatory phase-out on coal imports, Tom, over a specific time period.
Yeah, as I mentioned earlier in the last hour, John, buried in that article is the idea of what they do with trucks and ships. And to me, that's just as important. Obviously, it's not about heating and the huge issue of cold. Look at the record cold in France just in the last 48 hours. But John, the idea of restricting transportation logistics is arguably just as important.
Elisa, a mandatory phase out. Phase out, the important term there.
Yeah, although you framed it right before, which is this the first step? Are we seeing this as the threshold into a more serious conversation about oil and gas bans? And the conversation around, is this a moral question and not an economic one? Are people willing to go into recession in order to draw a line for what people are saying are absolute atrocities, similar to what you saw in certain pockets in World War II? How much does that change the game? And really, I wonder what the tipping point will be, because frankly, the sanctions, are they working? Debatable. Are they working fast enough? The answer for everyone is frankly no.
Fascinating story breaking elsewhere. Just to change topic just for a moment. Sky News reporting the following, Tom, that Steve Paliuka is approaching businessmen to support a bid for Chelsea Football Club. And one of them is the former Disney chief, Bob Iger. That's who Paliuka has been approaching. So that story just developing, Tom. That story coming from Sky News moments ago.
I've got to admit, I've been waiting for this, John. People in entertainment with tons of money, they see the magnet that is Premier League football. Where's Diamond in this? Diamond can afford to write the check. It wasn't listed in his,
From a personal perspective.
He likes Ted Lasso.
If you think Jamie might have a look at Chelsea Football Club.
Well, then buy Richmond if he doesn't want to buy Chelsea.
On a serious note, to Tom's point, you've got a massive franchise available, Tom, the Premier League Football Club, and there's some big money. I mean, I thought this would be a bit of a fire sale, TK. I was very wrong. There's some big numbers coming through.
What number are they talking about?
North of 3 billion sterling.
Yeah,
Could be more than that. Who knows? Coming up, Sarah Hunt of Alpine Woods on this equity market. Just beneath the surface, some cracks emerging. That's coming up shortly. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Bloomberg's learned that the EU will propose a mandatory phase-out of Russian coal imports. That's a direct response to reports that Russian troops committed apparent war crimes in Ukraine. The European Commission is also expected to propose banning most Russian trucks and ships from entering the bloc. The US Treasury is increasing pressure on Moscow to find alternative ways to pay bond investors. Authorities have halted dollar debt payments from Russian government accounts at US banks. Russia now has three options: drain dollar reserves it holds in its own country, spending new revenue, or going into default. The US Senate has set Ketanji Brown Jackson on a path for confirmation to the Supreme Court this week. Debate begins today on the nomination of the first black woman nominated to the High Court. Jackson's confirmation is all but certain now. 3 Republicans say they'll vote in favor: Susan Collins, Lisa Murkowski, and Mitt Romney. In Shanghai, a sweeping lockdown of the city's 25 million residents and mass testing has uncovered extensive spread of coronavirus. The city reported more than 13,000 daily COVID cases for the first time. China's current outbreak is surpassing a level not seen since February 2020. And in sports, Kansas made history last night in New Orleans, beating North Carolina 72-69 for the NCAA Men's Basketball Championship. The Jayhawks rallied from a 16-point deficit, the largest ever in a title game. It is the 4th time Kansas has won the NCAA title. Global News 24 hours a day, on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Everyone you meet in Port Harcourt has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes, have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now. We are dying slowly but surely, and our lifespan is reducing every day.
in Ukraine rages on.
President Putin's invasion is brutal.
Turn to Bloomberg for up-to-the-minute reporting from around the world and analysis of what it all means to you.
The intention here is to increase the pressure on the sanctions front.
I think the United States policy is that the sanctions continue until President Putin is no longer there.
For continuing coverage from Ukraine and around the world, keep it tuned to Bloomberg Television and Radio.
The European Commission is already preparing a next sanctions package, and I hope that member states will be able to decide on ambitious next steps as regarding the sanctions. So we must step up pressure against Russia, and we must step up our support for Ukraine.
That's where the effort is over in Europe. Valdis Dombrovskis there, the Vice President of the EU Commission. The proposal, according to our reporting here at Bloomberg, is a phased-out ban on Russian coal imports. Futures this morning down about 0.25% on the S&P 500. On the Nasdaq 100, we're down about 0.33%. Yields are higher by 6 basis points, just short of 246 on a 10-year. Euro dollar unchanged, just short of 110 at 109.77, and crude $104.11, up 0.8%. That line on gas, Tom, this from Germany just moments ago, stating the obvious: German dependence on Russian energy imports was a mistake.
Yes, that would be true. Maybe we'll ask Mr. Schroeder about that someday, or Mr. Merkel, as you mentioned yesterday. And Ms. Merkel, I should say, as you mentioned yesterday. John, here's this headline, and I just think it captures a moment. France, of course, within a huge election moment right now, opens Ukraine war crimes case on possible French victims. John, this is not going to end.
And they won't be alone. Tom, I think everyone's on the same page, including the administration.
From the shock of what we saw Friday and Thursday of last week, this is ramped up and is truly front and center. Maria today on Brussels this morning. Right now in the equity markets, we need perspective, and you can get perspective from names from the past. It may be Mr. Correa and the Pioneer Funds, or Sir John Templeton and the Templeton Funds. But long ago and far away, a very young Tony DeSpirito had a shingle out at the Windsor Fund of Vanguard. That means he is venerable and experienced with BlackRock today, and of course the U.S. fundamental equity manager. Tony, wonderful to have you here. It is so far removed of the quiet of those traditional flagship funds of decades ago. How do you adapt and adjust in managed conservative dividend investment given the turmoil we're reporting minute by minute?
Well, it's good to be on. You're right. We live in an unprecedented time. I could go through the laundry list of COVID, war, Russia invading Ukraine. We have, inflation at, the highest numbers we've seen in 40 years. We have a Fed that's tightening. We've had an inverted yield curve. And I think the thing to do throughout all of this is to really apply good old-fashioned common sense investing. And that means make sure you have sufficient resiliency built into your portfolio. And in the fund I manage, the BlackRock Equity Dividend Fund, the way we do that is through really a barbell approach, right? On one hand, I think you still want to participate in some of the most deeply depressed economic sectors, meaning financials and energy. But you want to balance that with some of the most attractive, more stable sectors, namely in today's market, healthcare and technology. And given the events and the market moves of recent past, I've been tilting that barbell more in favor of the stability sectors.
So when you tilt the barbell into the stability, you've been talking about how you're adding to unduly beaten up names within stability. What are those names?
Yeah, so I think the healthcare sector cries out in this sense, in that it's a sector that's really underperformed since COVID. Right, so the stocks have not done well, but when you look at underlying fundamentals of healthcare, the long-term fundamentals are good. Demographics mean we're getting older as a society. As you get older, you consume more healthcare, so the demand is there. There's a lot of innovative companies. A number of those company stocks are down pretty dramatically, and so I think there's real opportunity there. And it runs throughout the sector. I mean, you have in medical devices, you have, I think, COVID recovery plays as medical procedures have been depressed because of COVID. You have innovation in the pharma space. And then finally, in the HMO space, you have companies that are helping to control costs, helping to solve the problem of rising demand. And so I really think there's opportunity throughout that sector.
Tony, we're shifting from a time when a lot of people thought that security selection could lead to outperformance, dramatic outperformance, in a way where you get significant returns. Are we moving to an area where security selection has changed and now is becoming a sort of weathering strategy, a way to have stability and at least preserve your money rather than simply even trying for gains?
Yeah, I think stock selection is going to become increasingly important, particularly focusing on companies that are facing which companies are facing cost pressures and which are not, which companies have pricing power, so to the extent they have cost inflation, they're able to price it on to the consumers. And then what is the market saying about all that? What is reflected in the stock price? How much of that risk is there or not there? And so I think in this period of rising rates, rising inflation, stock picking is just becoming more and more important. And if you look back to the 1970s, I think that's what you saw.
Tony Despirito, thank you, of BlackRock. Tony, thank you very much. One thing that I think a lot of people thought would happen, Tom, which hasn't developed in the way people anticipated, small caps. I think people were looking for a little bit more relative outperformance on small caps.
Don't go there.
Than we've had.
Yeah, it's really, really interesting to see, John, and of course everyone in the value space, people like Tony with a very sophisticated approach to value. I should say, in the last number of weeks, absolutely humbled by the growthiness rally that we've seen, and that affects small caps. And John, again, that affects international stocks as well off of the dollar.
We've got to reset the conversation, though, haven't we? TK, how many times have we had a conversation about a quarter into the year that now is the time for stock picking and active management?
Don't get me going.
Every single year.
Oh, John.
Every single year.
Oh, John. This is a really important issue. It's one of my most famous interviews over the years, John. John Bogle and Cliff Asness and their raging debate over this. It was a really wonderful moment with the late John Bogle.
Go back to that, Tom. We've got some time. Go back to that. I remember that. That was special. What did we learn?
What we learned is Cliff Asness, who's a first-rate mathematician, going at it with John Bogle, a very bright guy, who's very much based on concepts. So it was the nerdy part of the business debate on active versus a much more conceptual, belief-driven, behavioral-driven debate of Mr. Bogle. And it was just absolutely great to see them buttress up against active and how you do active. Even more importantly, John, is the size of what does it take to outperform if you have to move the needle against a large pot of money. What is that marginal active decision for a big pension fund or a big multi-billion-dollar mutual fund?
Lisa, we're still having the same debate.
And I wonder if the tenor of it has changed, right? Because for so long, the Fed was the main game in town. Does it change when suddenly they're pulling it back and you're allowing more volatility on that front? Do you get areas that can be your stability if you pick the right businesses and the right names? That's the argument on the other side.
Futures this morning, and good morning to you. We're down about 0.25% on the S&P. On the Nasdaq 100, down 0.25% also. Yields higher by 7 basis points on a 10-year, 246.16. From New York City, this is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Marko Kolanovic over at JP Morgan saying the risk-reward of this market is not as poor as is currently fashionable to believe. Their view. Morgan Stanley, of course, taking the other side of that. Futures this morning down 0.2% on the S&P, on the Nasdaq down 0.2%. Also, the reason that Marco and the team have that view over in the investment bank is this idea that Fed repricing might be close to the end, and we could see a mechanical peak in the inflation story over the next several months later this year. Okay, got all that. Do you see it at the index level with the S&P down around about 5% on the year? Perhaps not, but you see it in the sectors in a big way. Let's talk about this. One sector that gets talked about a lot, and another sector that does not get it talked about enough. S&P 500 energy on the year up 38%. Tom Keene, the home builders year to date are down 27%. I know it's in vogue at the moment to talk about the transports over the last several days, but this has been the story of the year so far for me. The home builders, TK, already rolling over, anticipating that rate hiking cycle and what it might do to this economy and to that sector.
And with the rate story, of course, that folds into the mortgage rate. And is it the mortgage rate, John, or is it the rate of change of the mortgage rate? Rapidly, you wonder how much mortgage you can buy given where interest rates are. It gets smaller and smaller.
These home builders have adjusted in a big, big way, just like this bond market too. Let's finish on that. 2s, 10s, and 30s look like this. 246.71 on a 2-year, 246.16 on a 10-year, Tom. Just in and around that line of the sand, the zero, the difference between some steepness, just a little bit, and just a little bit of inversion as well. Tom, 2s, 10s, we keep doing it, don't we?
We've come so far, and we forget that. I mean, Frances Donald moments ago, John, was mesmerizing in her distinctive differences, say, with William Dudley, the former president of the New York Fed, or